Morning all. How are you all doing? Morning Danny, Yosa, Temper, Gregors, Virginia. How are you? Markets open. Quick break short on the FTSE and nothing so far on the DAX. How are you all doing? Happy Tuesday, Wednesday even today. So we'll start off with the news as usual. It's CPI day today for the US dollar, so should be a biggie. Morning Steve. We've had the GDP figures this morning for the pound, which came out as a 0, so negative pound. It's basically no change. It's what we had before, so no growth, not recession, but no growth. We were forecasting growth and we didn't get it. So that's weakened the pound a little bit this morning, not dramatically though. If you look at the pound pairs, we got obviously a spike down, but it's nothing really. It's 35 pips on the pound CAD, which is less than half an ADR, so not really any big reaction to it. It is negative. It will probably remain negative for the day, I suspect, but no ADR hits off of that. So that's this morning's news, and obviously it's CPI day today, 1:30 for the US. So unlikely that we'll get an awful lot of movement on anything but the pound this morning, because the market's not going to want to do an awful lot of large orders until we know what impact that CPI is going to have on the US. So that's today's news. We've got oil inventories at 3:30 as usual on Wednesday as well. But it's all revolving around that this afternoon. So we had a little bit of extra news coming at 4 o'clock yesterday. Basically a poll to say whether or not the Fed are going to cut by 0.5% or 0.25%. And the Fed unlikely to cut rates by 50 basis points for the rest of this year. So not just this meeting, but the next two, say 54 of 71 economists. So basically we're looking at 0.25 reductions for the next 3 months. Well, September, October, November. So 3 out of 4. They're factoring in that we won't have a drop on one of those. So it looks to me like obviously we're going to get 0.25%, which is what everybody's kind of been expecting, but erring on the side of caution that we might get a 0.5% drop. The CPI figure today is going to be important in the fact that if we get that CPI number very different to the forecast, we could well push, or it could push the Fed into a 0.25 point, a half-point drop. So we're forecasting a 0.2, which is no change month on month. If that is to drop dramatically, i.e. go into a negative number, that could have quite a big impact, and they could decide to drop by 0.5%, which could really weaken that US. So this number today, because it's still it's not so much 50-50, it's sort of 75-25 that they're going to do a 0.25% drop rather than a half. But that could change on the CPI number, obviously. So we've got another week until the rate drops. So next Wednesday is when they drop the rates. So quite an important figure today. So we'll keep an eye on that one this afternoon, obviously. Other than that, overnight, we've had lots of noise out of the Bank of Japan, basically saying how stable they are, how strong the yen is. Even if we increase interest rates, we're still going to be strong. We see everything going well. So very bullish talk out of the yen overnight. So we've had a couple of yen ADRs, as you can see there. New Zealand dollar yen hit ADR. US dollar yen also hit ADR. My Aussie dollar yen trade going the wrong way. But yeah, doesn't matter how many times I say I'm not going to do something. When I do it, 9 times out of 10, I'm right. So yeah, I said, didn't I, when I took this trade, it's like, I'm going to regret this. Anyway, so yeah, here we go. We've got quite a long drop until we get down to support. The US dollar yen has broken support now, so we've just made a new low on the year. Well, a new low since the intervention, rather, on that one. And obviously, New Zealand dollar yen is in the same spot pretty much as the Aussie dollar yen. So those are your ADRs today. Those two, you've kind of missed them. I was looking at taking a quick scalp trade, but I've missed it. So needed to be awake and trading an hour or so ago, really, to get into that off of ADR. But yeah, nice pullback from ADR there. So kind of missed that one on the New Zealand yen and the US yen this morning. A bit too late to get in. If it comes and retests, I might try a quick long out of that. But obviously, US dollar yen, anything basically today that you get into as a scalp, if you're not out of it by 1:30 this afternoon, it's going to go nuts. And it might go your way, but it might not. So it's just basically trades you want to have played out by the news really today. So that's the overnight news. There's your GDP coming in for the pound below forecast. Other than that, not a lot else on the news side of things today. DAX has broken long. FTSE's back inside the opening pre-market range. I'm not expecting a massive move today off of these, but you never know. Probably going to be rotational. I did miss a trade on the pre-market today. There was a nice little gap fill play on the DAX. So 7 o'clock is there. Somewhere around there anyway. But yeah, it opened up and immediately did gap fill play today. So I was a bit late getting to the terminal today, so I missed that, unfortunately. But anyway. So yeah, so we'll see where these go today. There doesn't seem to be an awful lot of volume at the moment. So there's your 5-minute opening range gone in, which is basically the same as the pre-market range. FTSE 130, basically the same as the pre-market range. So not a lot of volume. FTSE breaking short. So today, obviously, we had big drops on the indices yesterday across the board. We're pulling back at the moment on the DAX, but the market seems very, very heavy. So again, this afternoon at 1:30, if we get massive bull moves on that US dollar, expect the indices to come back down and vice versa. So opportunities basically to trade the indices today in line or against the US dollar movement, but the US markets, you might find it difficult to trade the open today because there'll be probably a lot of volume already gone into the market. So it might be a quiet open on the US. So I'm going to see what sort of movement we get on the US and decide whether or not I'm going to trade it this afternoon. So yeah, so there we go. Not a lot happening there. We'll also have a look at all the FX pairs this morning. So the ADRs today, you've got those two. Nothing's hit its weekly range yet this week. We'll probably get some weekly range hits today because obviously CPI numbers are coming in. The only monthly hit we've got... Oh, no, there's a load more monthly hits. Wow, where did they all come from? Oh, it's all the yens. Yeah, so it's all the yens, basically, all hit their monthly ranges. So every single yen pair are now monthlies. Okay, so that's the beginning of the month. So yeah, there are your monthly ranges hit already on all the yen pairs. So good chance of pullbacks on all of these. It's getting further and further away, my exit. I really wish I'd have got another trade on this morning. Unfortunately, it didn't quite work out. If you're using the market reversal alerts EA, you would have got a trade there this morning. What's that, 90? Yeah, would have got one on this morning with the market reversal alerts EA, position trader EA. The moving average cross didn't quite work out on that candle. So unfortunately, but it would have been nice to get that average down and try and get out a bit quicker. 9/11 day today, it is September the 11th, 23 years ago. 23 years ago. 9/11. A long time. Morning, Ismet. Neo. Was just Noob on a grind morning. Just watched the Trump debate. It's awful, I know. I'm thinking about having a cat burger this morning and maybe, I don't know, poodle noodles for lunch. What an idiot. It's just crazy, isn't it? He comes out with all this stuff and then they interview people and the people are like, yeah, but I think he's still probably the best of the two. He's a complete idiot. He's a lunatic. He's put him in charge of the country again. It's not going to go well. It's going to go well for the dollar. That's going to go up. Everything else, down the pan. People eating pets. Crazy. Anyway. Yeah, I think Kamala Harris came out top on that one. So ADRs we've covered. RSIs, there's a couple of hourlies just about hit. Yen. Yeah, so we know the yen is the mover this week. Aussie yen on the 4 hour, CAD yen, Swiss yen on the 4 hour, Euro yen 4 hour, pound yen, New Zealand yen 4 hour. So the only 4 hour RSI extensions we've got which are not yen based are the Euro Swiss and the US dollar CAD. So Euro Swiss 4 hour just extended. So again, you've kind of missed that one this morning. It's already gone. And the US dollar CAD. So the US dollar CAD is coming out of that area I identified as resistance yesterday. So nice looking short there. Coming down into propulsion at the moment. So potentially going to bounce out of here from yesterday's move. But we've also got these downsides as well. So don't forget today, anything you trade on this today from a technical perspective, i.e. all that looks like a good resistance bounce out, a support bounce out of propulsion, is going to mean nothing at 1:30 this afternoon. Technical analysis means nothing when there's a fundamental event. So that looks great for a resistance bounce, assuming inflation doesn't go the wrong way and the US takes off from one direction or the other. So those are the hits on the 4 hours, and Euro Swiss obviously to the downside. Just got out of my Euro Swiss long yesterday that I took a little bit of a loss on that yesterday. Still managed to make 5%, but still had to take a loss. I was up 18% on the day. I'm talking about my my scalping account, by the way, this one. So this is the account that I'm trying to double, 3.5K account. It's up to 5.3 now. So I'm up 49.7%. I was up 18% yesterday, but the Euro Swiss trade didn't work. So unfortunately. Why is it not showing? Yeah, so that was my Euro Swiss trade. Scaled in, took a couple of losses off, and just gave up in the end. But the only reason I held it that long was because I had a huge profit from all the other trading from yesterday, like that stuff. So yeah, but yeah, nearly there. Well, not nearly there. I'm halfway there, halfway to doubling, which is good. So I'll do a video on that one, assuming I do it. Haven't got there yet. You went long on Euro US dollar ahead of CPI. Yeah, went long yesterday on that. That's literally it's an RSI extension just and a double bottom bounce. So I went long on the double bottom bounce. We then came down. So yeah, I don't know which way it's going. So you know. No idea. Doesn't matter, does it? I mean, it goes. If it goes that way, I'll scale in, get out. If it goes that way, I'll get out. But I wanted some US dollar exposure on ahead of today. I was hoping it was going to get itself into profit yesterday. So what I was hoping for yesterday was a push up into propulsion, so that today I could break even it and have a free trade, just a free shot at maybe the US dollar dropping on negative CPI. But didn't manage to get that yesterday. So sitting along. Yeah, and we'll see what happens. But there's nothing else. I took this one yesterday because I'm struggling to find anything to get into. You know, with this just not moving at the moment. The only thing really that's been moving this week is, to any real extent, is the yen. And we've had some decent movement on, semi-decent movement on the Swissy. And those are the two instruments I'm kind of trying to not trade at the moment because they're very erratic and obviously open to massive manipulation at the moment. So I don't really want to try and get any directional bias on them because there isn't any. Because if you've got something that, the central bank heads have come out and said, we're going to manipulate this as we fancy it, whenever we fancy it, because we can, you can't have a fundamental bias on it. If you can't have a fundamental bias on it, you're literally flipping a coin. But you're flipping a coin against something that could do that. Yeah, I do not want to be in a position trade against that. It's just not on the cards, is it? So there's plenty of other stuff to trade. It's just not moving at the minute. So hopefully CPI will kick that off this afternoon. If we get some real confidence in the US dollar direction with that interest rate drop next week, and the CPI figure will probably confirm that, hopefully today, things should start to kick in and we'll get some movement. But at the moment, it's just kind of a little bit clutching at straws, trying to find other reasons to get in. RSI is just not quite, there's no relative strength movement at the moment. So we're looking for potential support bounces. But with support bounces, they will work sometimes they won't. When they don't work, because there's no relative strength, they just kind of flip-flop around. Look at the euro pound. Prime example. Yeah. Just can't do anything with it. 1, 2, 3, maybe 4, 5, 6, 7, 8, 9, 10. Day 11. Day 11 sideways. It's almost like I'm going to hold this for an entire month without it even moving more than an ADR. Just dead, isn't it? Really weird. We've gone from summer trading, which was actually not too bad, into after summer trading, which seems like summer trading. Markets all over the place. DAX long break. Not convincing though. So just managed to push up there. FTSE's not gone anywhere. I was just going to say, there's probably the best thing to look for today is any high-low bounces. Haven't really got much here, but so I'm assuming today we're probably going to stay in rotation until we get to CPI. So looking for some reason for it to stay rotational and range bound today, but it's got to actually get out of some kind of range at the open to do that. So we'll see. Right. So there's not much else to run through. So I'm just going to run through all the pairs today. So I'm looking for some exposure because I haven't got much exposure on at all at the moment. So without exposure, you have no risk. Without risk, you cannot get a reward. So we need to get some risk on the table, basically. But I can't find anything really that's moving. So I might look for some market structure-based entries, to see if we can just get into something really. But there's nothing extended. So I was just watching the DAX. That's Euro Swiss. So this is the high of the day. We've just tested on the Euro Swiss. That's the previous day's low, I think. Yeah, previous day's low. So potential little short on Euro Swiss setting up there, but that would be a continuation short. But I'd much rather it come. Just not a great propulsion gap. That's where I'd much rather short it from there. Very nice market structure, sort of, on this one at the moment. DAX has rejected the highs. So big wick on the DAX. So Christmas trees for 15 minutes at the open. Bulls tried to rally. They've just been run over. So see if this next candle sort of rejects, get a long wick, or we get a big bear candle in there. I would say we're probably not going long today. See where we go. Right, so running through all the FX pairs. So starting off with the Aussies. The basically Aussie dollar longs, which is what the fundamental bias should really be on the Aussie because they're not changing interest rates, aren't really doing a lot at the moment, as you can see. So Aussie's been pretty weak over the last sort of week-ish, 2 weeks. If you flick through all the Aussies, apart from the yen, because obviously that's been beating everything, you know, we've been on a little bit of a downward move. So the chances are we're going to start to rally again at some point soon because we're getting closer to everybody else changing their interest rates to the downside. Aussies are not going to do that. So any kind of strength whatsoever on the Australian dollar should rally it nicely. So all these Aussies, we're looking for areas to pull back into for opportunities for longs. Nice reverse alert on the 4 hour on the Aussie CAD there out of that RSI extension. So there's a 4 hour entry potentially just gone in there, which you would be looking for a new high to be put in. However, market structure at the moment is bearish. So I think this should start to move back up again. So that's the area obviously we'd be watching for a bounce. So there's a good looking opportunity for longs there. So I've got a really itchy nose. But obviously kind of missed that one. So hourly reverse alert went in yesterday on that and the retest. So nice market structure shift to the opposite side on that one. You are running straight into resistance though in this propulsion gap. So if it breaks this propulsion gap, we're heading up into there. So potential long opportunity on that one there. Just need to remind myself what my exposure is. Yeah, I've got an Aussie on already at the minute. 2 euros, pounds. So I can do New Zealand and Swiss really. So yeah, that's not a bad looking long opportunity there, longer term. So first entry anywhere in here really today. Second entry would be down in that propulsion gap, which is around about 3/4 of an ADR to the downside, to an ADR. And then look for a bounce back up into there. This area here is that crazy massive move that we had, which was 200-300 ADR within a couple of hours. So this is really the low. This was that weird anomaly which is on most instruments. So that's where I would expect a decent pullback, and that would be your new bottom. If they're going to put in, sorry, I don't know what is going on my nose. Got like something crawling up there. Nice view in the morning, isn't it? Hope you're not eating your breakfast. But potential, obviously, market structure is short. So you could be prepared for 2 or 3, 4 positions if it is to go lower before it pushes back up again. But should be longs. Aussie dollar Swiss. Swissy will do at the moment what the yen is doing. And obviously we know the yen is powering up at the moment. So Swiss should be powering up as well, which you can see for the last week and a half it has been. Potentially, again, still looks good for longs, but the Swiss franc is the one where at the moment it could go anywhere, anytime. So the problem with the Swissy is when it decides to go on a safe haven run or on a manipulation, it doesn't stop. So we'll see where we go from there. But it's a bit of a tricky one, the Aussie Swiss. So I'd much rather be looking for longs than shorts, and it is still pulling back at the moment. So every reverse alert potentially is a good long opportunity. Just about to get one in the next 35 minutes if this candle remains bullish. So that's going to turn into a reversal alert long at last week's low. Got a little bit of divergence sort of starting to creep in on the hourly there. So it is looking like it wants to go bullish, but with that yen powering up at the moment, that Swiss is probably going to power up as well. So the chances of it getting anywhere is going to need that yen to weaken. If the US dollar strengthens today, we'll get that potentially. So we might well have a move start on that this week. But we'll see. Aussie dollar yen, I'm long already. This thing's just grinding like crazy. Positive swaps, which is good. But yeah, looking for 175 ADR, looking for a pullback. We're just not pulling back at the moment on this yen. It's just on a mission. And Suzuki and his friends didn't help me last night by basically talking the yen up. It's Nakagawa last night. So yeah, it's basically yen strength at the minute. So we're just waiting for them to pull back, profit take before the next leg potentially. So yeah, just waiting for them basically. So Aussie dollar, New Zealand dollar. I don't know what's going on. It's only my right nostril as well. It reminds me of that scene from Star Trek where that creature crawls inside Chekhov's head. I feel like I've got that growing up my nose. Very excited about scalping video. Don't be too excited. Haven't done it yet. Got to double the account first. Blue Trader, morning. It's sunny in Pontevedra. Quite sunny here as well. It's cold though. It's winter. Weird. Haven't had summer yet. I was just saying to the guy, we've had the paddleboard out once this year. We normally go out 3, 4, 5 times in summer. Once. Weird. We didn't get summer this year for some reason. Aussie New Zealand, very, very, very sideways at the moment for the last couple of weeks. Good bottom range bounce. Reversal alert went in there, and the retest went in yesterday. So again, potentially good looking long opportunity. Yeah, no reason why we shouldn't come back up and test those highs. Aussie should be bullish. New Zealand should be bearish because obviously we've got that New Zealand drop on the interest rate, which was also unexpected, and the Aussie not dropping interest rates. So the bias is long. So your longs, in theory, should work out faster. Just doesn't seem to be kicking in at the moment. Seems like the market at the moment is waiting for something, and I suspect it's waiting for that US dollar confirmation. So we'll see. But you've got that high there, which we hit this week, where we kind of stalled out, but we have put a higher low in. So market structure looks like it wants to go long. For those wick-off traders out there at the moment, you've had your wick-off spring, higher low gone in, so you should accumulate here and then pop up there if wick-off works. So there you go, or wyke-off, whichever way you want to call it. So good looking long opportunity on that one. Can't see any reason why that shouldn't run from there. But again, no extension. It's just flat. Yeah. Just got to be patient when the market's like this. US dollar. So Aussie basically long US dollar dropping interest rates. Again, this is a pullback ready for that next leg up potentially. We should get some nice weakness coming into that US over the next couple of weeks, assuming they do what they say they're going to do. They seem to change their mind every 5 minutes. At the moment, we're on a 2-day cycle where we're flipping between 0.25% and 0.5%, 0.25% and 0.5%. They keep changing their mind every couple of days. So when we get the quarter or half next Wednesday, we'll have some directional bias. But until then, markets like we'll sit around for a week, get a bit of news, we'll sit around for a week, then we'll get the news. Whether they're changing the interest rates or will actually go somewhere. So got to be long on it. But it's just not getting anywhere at the moment. So I had shorts on from obviously here week before last, which played out nicely, but just can't get any movement at the moment. So the range lows we had down here, again, that was that weird move. We formed a new range high 2 weeks ago, and now we're pulling back. So really that is the range low there. That's that weird move. So that's a 50% retracement on the leg. So it should be good looking long opportunity from there. Fundamentals are pointing that way. We're just waiting for something to obviously happen. CAD Swiss, very much moving with the yen at the moment. So Swiss franc, yen, both massively strong off the back of the intervention leg. It will start to weaken at some point. The market will just get tired and it will just unravel to a certain percent. But right now, the Canadian dollar will probably go with the US when the US goes. So the fact that we've got such a strong yen and a strong Swiss at the moment, obviously, is a bearish stance on this one. The fact that the US is going to weaken will drag the CAD with it, which is a bearish stance on the CAD. So you've got a bullish Swiss franc making this bearish and a CAD being bearish making this bearish. So opportunities to go short, there was one there. So haven't had anything there, haven't had any ADR hits to the upside to look at getting short on. So yeah, just can't really get anywhere on that one at the minute. Want to try and get in short, but there's no real decent pullbacks. So if it does break down, potential you could look for pullbacks to the low, wait for reversal alerts to indicate that the sellers have jumped on and then get in with those, but not a lot you can do with that at the moment. All the ends, might as well cover all the ends as usual. It's still rallying off the back of the intervention. So this was a very confusing pullback. We had a 38% retracement on it, and then we've sat around for pretty much a month. Last week, we started to break down again. So more yen strength starting to trickle in. But the yen strength will probably be normal yen strength. In fact, you've got to go back quite a way to find normal yen strength now. There, that's probably more like it. Normal yen strength will tend to do that. Yeah. So you will get like 3-4 ADR moves on the yen. So looking at 4 ADR is about 500, 600 pips. So a good 4 or 5 ADR move before a pullback, not unusual. So yeah, I don't think it's going to just continue parabolic. But don't know. We've never been in a situation where we've had this type of intervention from the Japanese before. So again, another one of those unprecedented moves. But lovely bottom coming up on the Swiss yen down here. And again, obviously, Swiss yen, this is the one that I would probably be the most interested in trading because it's unlikely that these will go opposites. Yeah, it's unlikely that the Swiss franc will power up as the yen weakens or vice versa. They're safe haven currencies. They tend to power up at the same time. So if one of them decides to go neutral and put the brakes on, the other one will take control. Then that one will be due a move, and then that one will tend to weaken. So market structure on this one is probably going to be the nicest and easiest to trade. So good looking opportunity for a long on this one right here. We've got if this hits ADR today, actually. So if you get an ADR hit on this today, which is basically ADR is exactly last month's low. Last month's low. You're going to find limit orders sitting there wanting to trigger at last month's low. You're also at ADR, which means that you'll be exhausted. So if it gets down there today, that's a good looking opportunity. However, if it gets down there today at 1 o'clock, 30 minutes later, you've got the CPI numbers for the US coming out, which is going to move potentially both of these. If people are going to dump all their US, they're going to need to put it somewhere. It's going into these two. If people need to rally the US, they're going to need to pull it out of the safe havens they've had it in to put it into the US. So either way, this pair is going to move this afternoon. So again, timing technically looking like it's getting almost ready to set up. Timing fundamentally, you don't want to be jumping into a trade half an hour before the news, do you? So yeah, again, very tricky one to get any positions on. Euro yen, same thing. We're coming down towards that monthly. It's 150 ADR for the euro yen. Pound yen still miles away, and New Zealand yen. So whatever your bias is on it, it's one of those instruments at the moment that is probably good to trade intraday, but long-term view on all the yen pairs is very difficult. You have to say bullish, which means you want to be shorting everything against the yen at the minute. But I want to go long because it's got positive swaps. And the thing that really killed me trading the yen this year has been swaps. I paid over $2,500 to hold US dollar yen position to break even. So it cost me $2,500 just to hold it for a month. It's just not worth trading in any direction but that. So if you're going to trade it short, it's going to cost you. And if you get into a short as it starts to pull back, it's just too expensive. So those are all your yens. Again, I'm not really interested in them. I'm in the Aussie yen. What's going on my nose? And I really wish I wasn't. However, this morning does look like it might be finding some strength, and I'm really gutted I didn't get that on. This is the difference between being on the 1 hour time frame and the 15-minute time frame with the position trader EA. Yeah. So I've got the EA at the moment running on the hourly time frame. This moving average is my hourly trigger. If I was running on the 15-minute, I probably would have got triggered on that there. Actually, let's have a quick look and see if I would have. Where's my MA then? Okay. Yeah, so that candle there would have triggered another entry for me on the 15-minute time frame. On the hourly time frame, it didn't, because it didn't cross the MA. So difference between being on time frames. Sometimes you're better being on the hourly. Sometimes you're better being on the 15-minute. There's no way. There's no right or wrong. It's just sometimes it's better to be on one than the other. Unfortunate, but never mind. Euros. Go for the euros. In these rotating markets, we could perhaps try Bollinger Band scalping. You could do. Try what you like. They've got odds are the same. It's 50-50. Just go back and forth without any clear direction. I don't like Bollinger Bands personally, but you can try them. The Bollinger Bands are no different to anything else. So you can use a Bollinger Band instead of an RSI. But why not use an RSI? Stick a Bollinger Band on a standard deviation. If I could find my Bollinger Bands. 22. Let's make them black so we can see them. So if you see where you get extended on the Bollinger Band, you got extended on the RSI. You got extended on the Bollinger Band. You got extended on the RSI. Yeah. So a lot of the time you'll find that they'll tie up with each other. There will be instances where you'll get extensions below, which you wouldn't get on an RSI. But a lot of the time, you know, and the same thing stands on Bollinger Bands. They work well sometimes, but it's not the Bollinger Band extension that makes a successful trade. It's when you get out of the trade or get into the second part, third part of the trade, and when you get out of the trade, which makes the trade work. Yeah. A Bollinger Band is a condition indicator, the same as an RSI is a condition indicator. It shows you a condition in the market, which is stretched. The signal indicator is up to you. Your signal indicator could be we close outside the Bollinger Band, or it could be that we close back inside and open outside the Bollinger Band. The signal, obviously, after the condition is your entry point. That doesn't make you profitable or make a good trade or a bad trade either. It's whether or not you get out there, whether you get out there, whether you put a stop there, or whether you decide to take additional entries. That's what makes you successful, not the fact that you're using a Bollinger Band, the fact that you're using RSI. You can flip a coin and be profitable. But Bollinger Bands give you an awful lot more signals. And before you say, well, why don't you just increase the sensitivity so that it gives you less signals, that's fine. But then you're using an RSI. Every indicator can be adjusted to match any other indicator. Yeah. So, you know, moving averages is a great example. People say, you know, I don't use the 20 moving average. I use the 22 moving average because no one else is using it. And look how accurately it bounced off the 22. And everyone that's trading the 20 would have gone, look how accurately it bounced off the 20. It just bounced off the 22 a little bit later. It's the same thing. It just retraced. I could draw a million lines on there and show you them bouncing. Yeah. All you do is you adjust the indicator to match the chart you're looking at. But you're just matching this period of time. You go back to a previous period of time, the indicator you just used won't work because the market conditions are different. Yeah, so you can switch indicators, but if you think about it, when you're switching indicators, what are you doing? You're system hopping, because the RSI or the ADR or whatever the indicator you're using as your condition at the moment isn't giving you enough signals. So you want more. Greed. What does greed lead to? Massive decline in everything, basically. So changing indicators is fine. You're just system hopping. As long as you identify that you're system hopping, it's not a problem. Going back to the 5 steps to becoming profitable that I keep talking about all the time. Yeah. You are getting to the point where you've finding your eureka moment. And then you get to the point where you're walking on water, where you're making loads of money. And all of a sudden, your P&L stops making money because the market conditions have changed and the system suddenly doesn't have any entries. And you're like, right, well, I've got to switch systems. You're going to be ending up straight back there again because you're now trading a new system and you are going to be incompetent with that system. Then you're going to realize you're incompetent with that system, and your eureka moment will be, holy crap, I've jumped to another system. The other one is working again. That is your eureka moment, which gets you onto autopilot. You just sit through it. Yeah. All that's happening at the moment is market conditions are changing. Yeah. It's going flat. Mean reversion is difficult to make work when there's no signals. Accept it. Move on and wait. It will work again. You just got to wait for those signals. We've been in here many times where that's lit up like a Christmas tree and we're like, woohoo, look at all these opportunities. You forget those ones. There are times when the ADR dash is, everything's like over here and here and like, wow, look at all this movement. And it will be like that this afternoon at 1:30, probably 2 o'clock. There'll be loads of opportunities coming up. Just got to wait, be patient. Unfortunately, it's not as much fun, which is why scalping is good, because every 5 to 15 minutes, there's an opportunity for a signal. But every signal is an opportunity to lose money as well as win money. So that's why it's so difficult scalping. Morning, AZ. Euros. So Euros, basically, outlook is bearish, very bearish, now that we're looking at the potential drop to 3.65 tomorrow. So it's not much bigger, it's a 0.1 larger drop than we were potentially forecasting. As you can see, market really isn't quite sure what to do with the euro at the moment. I suspect the move that we are going to get is priced in at the moment. Yeah. So euro likely to go bearish. However, if it's factored in, it may not. So we need to wait and see what Lagarde says. So the important part this week on tomorrow is going to be the ECB press conference at 1:45 tomorrow, which is where Lagarde is going to give us guidance as to what they're going to do moving forward. Yeah. What they do is usually factored in. Unless we get a shock. If that comes out at 3.75 tomorrow, so they go down by a half, which is what they've always done historically, then we're going to get a pop in the euro potentially as well. So it could go either way tomorrow. But fundamentally, over the long term, the euro should start to devalue, as should the pound, as should the US dollar, as will the Canadian, and as is the New Zealand dollar. So when you look at it like that, everything devaluing at the same time, what does that make? Nothing really strong, nothing really weak, which is why we're not seeing a massive drop in this, because at the moment, the Oz, looking at the odd, but the Oz is also weak at the moment because it's just not finding any power for some reason. But all these pairs, there's not an awful lot of strength or weakness really in anything apart from the Swiss and the yen. because everybody's dropping interest rates. So it's going to be interesting to see what the market makes of it tomorrow, whether it decides to really move on it. Let me just quickly switch back to the indices. DAX has just closed back inside the range. So we've definitely rejected those highs there. I'm going to leave it on for the moment. I've just taken a short over here off of that high. That's not going anywhere either. So you see by the wicks today, this is just algorithmic. There's no volume in the market. There's no directional bias. So again, CPI day rotation. Not going to get far today, I don't think. So yeah, all of these euros, longer term bias should be fairly weak, but obviously everything else is weak at the same time. So I think we're moving into a cycle with interest rates where we're going to gradually drop quarters and halves, maybe missing a month here and there, which makes everything do the same. So GDP is going to play a bigger part in movement as to how well an economy is doing, because everybody's expected to drop interest rates. Therefore, there's nowhere better or worse to put your money. The euro is sitting at 4.25. We were expecting to go to 4 or 3.75, and they're forecasting a 3.65. That's because this is coming down way faster than anticipated. And the next CPI, if it goes negative, that will be the correct move, moving to 3.65. However, if the next CPI bounces, they should have probably gone to 3.75. So we probably won't drop interest rates next time, which makes it kind of neutral to bullish. So it's very, very mixed messages with interest rates at the moment and where things are going fundamentally. So technicals on this, same as usual. If it moves up, it's probably going to pull back. So we're waiting for some kind of strength in one direction or the other, but there is no strength at the moment, as we can see. Market's just kind of flip-flopping around really at the moment. So looking for the 80 extensions on RSI 10, we had a long there, as you can see. Absolutely fine. Perfect. Worked out beautifully. So you had a short there, but that was on that 300 ADR push in 2 hours. But we're just waiting for some kind of movement. And as you can see this week, it's just not going anywhere. So even if you stick Bollinger Bands on this, yeah, normal deviation. You on Friday off the back of the news, you had an entry. But there's nothing to do this week, is there? So sitting around. You had a little long there this week. Where are we? That's Friday. So might have been long there. Would have been long there. So yeah. You're short this morning. So yeah, beautiful. You know, everything works. But you can stick a fast RSI on a 15-minute chart, you'll get the same entries. Yeah, it doesn't matter which indicator you use. It really doesn't. If you're trading mean reversion, you don't even need an indicator. If the thing goes parabolic and it leaves a propulsion gap, trade into the propulsion gap. You'll be right a lot of the time. So yeah, so Euro odd at the moment sitting sideways. The bias has got to be long on it because of the Australian dollar. And it looks like a good one to just hit the buy button on right now and assume tomorrow the euro is going to drop. But we'll have to wait and see what happens. So Euro CAD, again, this afternoon, the CPI numbers are coming out. Good chance we might get a little bit of strength coming through. We may also get a little bit of weakness, so that could go absolutely anywhere this afternoon. But again, no extensions on RSI or anything. Euro Swiss, again, Swiss franc we've looked at. Euro pound, I've got longs on. I've been sitting in this for 11 days waiting to get out. I would love to be out of this by tomorrow. If CPI today can drive this back up above my average, I will be out ahead of tomorrow, because this is 11 days I've been in. I've made money on it. So I had an aggressive drawdown control position here, which I got out of and used that to do DD control. So the trade is up at the moment, but it's also down because of the swaps that I've been paying carrying this for 2 weeks. So at the minute, I just want to get out basically. Directional bias on it is very difficult because Bailey's not confirming or denying what the hell we're doing with interest rates in the pound. So, Bailey could open his mouth and go, we're not going to drop interest rates. Or he could open his mouth and say, we're going to follow the euro and go 0.75. It's just no idea. We'll go the other way, actually. But so, yeah, very difficult to call anything on that one. Euro New Zealand pulling back beautifully. So we've got lovely market structure on this one. That's a 50% retracement bounce, market reversal alert and retest in there. New lower low gone in, new lower high gone in. So it looks like a beautiful spot to short. So there's your 3-bar reversal at the highs, reversal alert, retest, new low, lower high. So yeah, looks great for shorts. You had a 5-minute entry on that this morning. Up here and a retest. So yeah, looks good for shorts. But again, wait to see what happens with CPI this afternoon. And Euro US. So I've got one long on this at the minute. I just wanted some US dollar exposure on to get going. Whether or not it goes bull or bear this afternoon will obviously determine whether or not I'm going to scale into it or get out of it this afternoon. Just going to stick a TP on it. Where should I stick a TP? 2-day high. So that's this week's high, basically, is 125 ADR. So I'm going to go for this week's high, assuming I can get a new spike. 125 ADR. If not, I'll be scaling into second position on the way down. But bias on this one, again, very difficult to call. We should be seeing weakness in that US dollar, which means that will pop. However, we could see massive weakness in the euro tomorrow. Yeah, who's going to be the weaker? This is always what you're trying to determine when you're trading Forex. Who is going to be the stronger and the weaker currency in the next X period of time? Is the euro going to strengthen or weaken more than the US dollar? That is your bias, basically, isn't it? So hard to call. They're both going to drop interest rates. If we get a negative number on CPI today, these are both going heavily bear in the next week together. So which one's going to go the more bear? No idea. So at the minute, though, technically, it's a beautiful pullback for a long. And we've just broken that weekly low and tapped into that other weekly low. So we've got a lovely area of support, which has been bought up here. So if this reversal alert holds, there's a good chance we're going to come up and test these highs. So you could hold this swing for a week or so up into those highs. But we'll see. So there's your euros. Morning, FTNet. Doesn't the Fed starting to drop interest rates points to normal market operation conditions? Well, there's not a normal. Normal is interest rates moving up and down. But this is the thing. We haven't had that for the last 3 years, have we? So 2022, we started interest rate rallies. 2023, we started interest rate freeze. 2024, we are starting interest rate drops. So it's going in a 3-year cycle. We're not used to that. We're used to interest rates going all over the place all the time, based on the economy of every country, which is different all the time. Since COVID, we've had everybody in the crapper, and then everybody getting out the crapper, and now everybody getting into the crapper again. Yeah. So it's unusual. If you look at an interest rate graph, like for something like US, euro, and the pound, yeah, and say, can't use the yen, let's say the Aussie, you'll see like over a period of time, whatever the time may be over years, you'll see this sort of thing happening. Yeah. And then you'll see that one doing that and that and that and then that, but they won't be the same. Yeah. And the pound will be doing nothing, and then it will drop slightly, and then it will pop slightly. And then Aussie will just sit, and then it goes mad for a bit while they're not sure what to do. Yeah. Everybody's out of sync. What we've got at the moment is everybody dropped interest rates to 0, some negative. Yeah. And that all happened within months. Then we sat for over a year doing nothing. Yeah, sorry, what am I talking about? Opposite direction. Everybody increased interest rates rapidly from 0 at COVID to ridiculous. Now we've sat around and now everybody's doing that. So that cycle where you've got everybody, which is what you call a differential, having a completely differential and the differential changing on a month by month basis, the differential hasn't been there. We all drop rates to 0. We all increase rates to somewhere between 4 to 5.5%. We all froze rates for a year. Now we're all dropping our interest rates. And we will get to the point where the US stops there, the pound stops there, the euro stops there, and then we start that cycle where everybody goes out of sync again. That is normal. We haven't had it for 4 years. So this is what I keep saying about it. Things will get back to normal and the market will be more normal at some point, which makes trading an awful lot easier because you have an easier fundamental bias where if something pushes, it will pull again. So interest rates, they go up for a little bit and then they come down for a bit. Then they go up for a bit, and then they come down for a bit. They don't usually go up, stay up. Yeah, this is the difficulty at the minute. So there is no normal anymore. I don't even know if we will get back to a normal. It's very hard to call because we have no precedent. We can't go back and say, oh, last time we had a pandemic, this happened. We've never had one. The world is totally different now. Totally different now. Unemployment market is completely different. Housing market is completely different. Economy is completely different. Economics are completely different. It's all different. Stock markets, you can see by the stock markets. We've never had stock market, a bear market in the S&P 500 like we've had over the last 2 years. Never happened. But then we've never had a bull market in the S&P 500 while all businesses are closed. That's never happened. And this interest rate rally and drop that we're seeing at the moment is the fallout from all of that crap, which we didn't know what to do. It's like we reset the human race. COVID came and we went, not seeing that coming. We're all screwed because nobody knows what to do now, do they? We've been kind of pushed back 40, 50, 60 years into the depression after the World War II, in that we were like, holy crap, now what do we do? Who's going to pay for building all these buildings that got knocked down in the war? Yeah. It's a different scenario. So you've got to just adapt to it. If you find something stops working for a massive period of time, then it's time to switch. You switch to different market conditions. So, and this is what ADR is about. This is why we use ADR and why I go on about ADR all the time. Yeah. This is your measurement of volatility in an instrument. If volatility was to drop to a period, to a level and sustain a level for 6 to 8 months that we've never seen before, something's changed. You've got to change. So, if you go back to pre-COVID, God, I've got to go back a long way now on this chart to get to pre-COVID. Yeah, that's COVID. Yeah, that is the interest rate rally starting. Yeah, that is the interest rate drop, fallout. Yeah, we had 1, 2, 3, 4, 5, 6, 7 months. Tightest market we've ever seen. And then we were like, okay, let's change the interest rates. Everything comes back to life. Yeah. But go before COVID, look how stable it is. Look how stable market structure is. Everything's just normal, ups and downs. Month of this, month of that, month of this, month of that. Summer trading. Yeah, summer trading. Look at something. This is why we know summer trading is the same every year. Reduction in volatility. It's just that what happens. Then we go back to normal. Yeah. Then we had that. So you get the odd bump every now and again, which will be a financial crisis, 2016. It's just, but what is the new norm moving forward? Don't know. This is the lowest ADRs we've ever had. Ever had. We've never been down at these levels for sustained periods of time. So It's tricky. You have to adapt. This is why no system or strategy is ever going to work forever, because it's just not, the market changes all the time. We were talking about the other day in the live room about the emergence of China, with Brazil and, this new Eastern powerhouse that's building. We currently trade everything in the US dollar. The US dollar is and has been forever the strongest currency on the planet. Over 50% of all transactions worldwide are done in the US dollar. If we start using the yuan, we won't be trading the US dollar anymore. You've got to adapt, got to change. So, all this, everything you do on a daily basis is hope. This is why strategy development is so difficult, because if you backtest a strategy over the past, the conditions you're going to trade in aren't going to be what they were in the past. So nothing is ever going to be the same. You have to look for what is the best sort of thing to do. Everything is woolly in trading, yeah? Everything is always woolly. You can press the button and it will either work or it won't within X amount of time. The reason it works or doesn't work can be fundamentals, can be technicals, could be an earthquake, could be a war. It could be the US, Biden at the moment, deciding that he's going to allow Ukraine to fire missiles into Russia that he supplied. That's going to screw things up. Yeah, there's a million things that will cause the trade that you just press the button on to go in one of those directions, which is why I say the reason you took it, whether it be a MACD, an RSI, a stochastic, a moving average, a reversal alert, a Bollinger Band, a propulsion gap, an ADR, it doesn't matter why you take a trade. They give you an edge in that there is a probability attached to them that plays out more often than not. But once you're in it is how you make the money. And the market conditions will be different every time. Every time we get to ADR 125, there's a 23% chance of it going further. It will either do that, or it will do that, or it will do that over the next 24 hours. But the thing that causes those three movements has nothing to do with hitting ADR 125. It's what's happening tomorrow. Yeah. So adapting for, what's normal. It's normal. And I've redone this test, and this is why I did that ADR video a few months ago. I reran all of my analysis and statistics that I did over the last 20 years to determine whether or not these levels are still valid, and they are. So the statistics on these levels over the last 4 years is the same as it was over the last 20. So that is just because banks get exhausted. There's only a certain amount of money they can execute a day. And if you get all of it going, or majority of it going in one direction, it's very difficult for them to maintain that, because they run out of money. Not they never run out of money, obviously, but they run out of orders and they run out of people on the opposite side. If you get run over all day long trying to long something, you stop. If you stop, they can't sell to you anymore. If they can't sell to you anymore, they might as well just take profit on what they've just sold. That's how it works. That's why it goes up and it comes back down again. That will always happen. It's just whether or not you need to switch time frames. Like you say, we were talking about changing to a Bollinger Band. Bollinger Bands work really well on lower time frames for scalping. Not as effective on higher time frames because we got smoothed out movement, which is more fundamentally driven. Adapting. I started scalping after COVID because everything was flat. So I needed to drop time frames to try and find quicker entries, which is why I started looking into indices again, because FX was becoming more difficult to extract money out of because the movement wasn't there. But indices, it's always there. We know it's always there. Same time every day. It turns up at 8 o'clock in the morning. It turns up at 1:30 in the afternoon in the UK. It's always there. Like a clockwork, isn't it? And it will always be there. As long as there's an opening bell, this thing will move at the bell. Fact. Always has done, always will do. If they stop having an opening bell and switch to Globex like in the US where they're 24/7, you have to adapt. Strategy's not going to work anymore, is it? So, it's all about change trading. Unfortunately, I'm tempted to give up on euro pound at break even. Yeah, I'm very much the same. If we get today, if we can break this high, yeah, this is the if we can break this high, which we've held now for 3 days straight, so Friday, Monday, Tuesday, if we break that high today, we are going to push straight up into this accumulation, which is going to stall it. and that's going to be exhausted at 175 ADR. So this could do this today on CPI. If it does, and that for me is a negative $350 or something, I would much rather take it off than hope we are going to go that way, because tomorrow this thing could just collapse. In fact, there's an argument for getting out today anyway, or just maybe scaling out of some of it. But I've only got 3 positions on. I've just held them for 3 weeks because just can't, if it ain't moving, you can't do anything. You're stuck, aren't you? So there's profit. I will come out of the trade overall with a loss. But what worries me about the euro is if the market decides, if we do get that 3.65, it doesn't like the 3.65, and Lagarde comes out and says if the next CPI number drops, we're going to have to drop another 0.5%. They've got no choice. They're going to have to weaken the euro. And I don't know how fast and hard it will come down. If it comes down at that again, it's just not, it's not holdable, is it? So tricky one, that one. You're right, I'll let it go. Yeah, no, there's nothing wrong with system hopping. Don't get me wrong. There's nothing wrong with system hopping if you're doing it for the right reasons, i.e. you are going to move permanently over to a different entry criteria. Just don't move every month, every 6 weeks. Yeah. I'm notorious probably for changing my strategy. People ask me all the time, what RSI are you using at the moment? Because the bootcamp says 1. You did a video with you showed your EAs using a different one, and now you seem to be using a different one again in the live room. You're now using an RSI 10 on the 4 hour. You were using an RSI 14. You started off at the 70 levels, and now you're using the 80s. What is it? The answer is, I don't know. How could I know? Because unless I've got a crystal ball to see the future, I don't know whether it's best to use that line or that line, and I don't know whether you should be using a 21 or a 14. I'll tell you in 2 weeks' time, dependent on which of those it respected. I don't know which it's going to respect. The RSI is a relative strength indicator. It tells me something has moved. I'm a mean reversion trader, which means I play the reversion of moves. I need something to tell me it's moved. That's it. Whether it's a 21, a 14, an 80 level, a 75 or a 70 level, I don't really care. If something's moved and I think this is going to move the other way at some point because I've met a decent level or something, I'll take a trade. That's it. It's as simple as that. There isn't one that works better than the other. Obviously, the more extended, the higher the probability. So if you go onto the 4 hour and you're using an RSI 90, happy days. Your strike rate on RSI 90 is in the region of 70 to 80% with one trade. You're not going to get many of them. Yeah, I mean, if you look on this 4 hour chart on the euro pound, we've had one. That didn't quite hit it. That didn't hit it. You've had one. Maybe two. Maybe two. Yeah, but it's 100% strike rate, isn't it? That's 100% strike rate with 2 trades in a year. So you can always get the best possible entry in the past. But who's to say this isn't going to go up to there and embed itself at 95 and go parabolic up into here when I enter there, and there, and there. I can't see beyond that bit of chart, so I've no idea what's going to happen. In which case, then I'll be saying, yeah, the 95 is the best to use. Look at the strike rate on the 95. Because, that's curve fitting. You can't curve fit. I can curve fit to my heart's content, but it's not going to happen again the same way as it in the future. So I've always wanted to ask, do you use a mouse to draw your charts? Use a mouse? Yeah. No, I don't use a pen. No, I can't. I've got a pen. This is a mouse. There he is. There's Mousy. That's why when I try and write, it's terrible. That's not my handwriting. My handwriting is actually quite neat. I just can't write with a mouse. I can draw lines really easily with a mouse. I tried to use a pen. The weird thing about using a pen is when you put it down, you've no idea where you are on the pad. So I kept running out of space because I'd never put the pen in the same place twice. I just couldn't get on with it. So yeah, it's a pen. It's just Epic Pen, it's called. It allows you to draw stuff and, Anyway, there you go. Market will always stay irrational longer than we can stay liquid. Exactly. Yeah. You've got to adapt. That Euro Swiss trade that I got out of yesterday is a prime example. I got out of it with a 400. That's a dollar account. Got a $400 loss. Yeah, because the reason I got out of it yesterday was because if it had carried on dropping today, that $400 loss would have turned into a $1,500, $2,000 loss, and I can't take that. So get rid of it. Market will do what the market wants to do. Perhaps we'll get a new pandemic before the markets normalize again. Yeah. Not whether another will come, it's when it is. Yeah. But we will be better prepared for it this time. And we will know how to handle it better. It still will be bad, obviously. Markets will react to it massively. They do to everything. Don't forget, all you're looking at here is a bank's position on a currency. Or if you're looking at stocks, your bank's overall positioning on stocks. Yeah. Their positioning is based on what's going to be happening over a short period of time, between a month and 3 months. When a pandemic hits, that positioning changes. Everything changes. When an earthquake hits, that positioning changes. When oil lines get cut because wars, that positioning changes. Everything changes based on fundamentals. And fundamentals drive all markets. Doesn't matter what it is. It drives crypto, even though nobody knows why it does, what it does, who invented it, nothing. It's just made up thin air crap. Yeah, but it moves it. Fundamentals move everything. They move the Forex markets, they move the stock markets, they move metals, they move oil, they move all commodity pairs, they move bonds, they move everything. It's all about the fundamentals because that's what drives the economy. And the economy drives every market you look at. So the market will change direction and keep going as long as it needs to, wants to, or can, and you are insignificant. So that's where that saying comes from. The market will stay irrational longer than you can stay liquid. I always use the Aussie New Zealand example. Yeah. Where the Aussie New Zealand collapsed. Yeah. I've got to really go back to find things now. It seems ages ago. Yeah, but, it doesn't matter what you think the bias is on this thing. If it wants to drop that fast and that hard, which it's never done before, it will. Yen, again, it's obvious, isn't it? Go look through the charts on the yen. COVID, yeah, obvious. COVID. Nothing you can do about that one. Look at that. Never happened before. Last time that happened, a move of that size, 20,300. $11,000. Yeah. The intervention move we've just had on the yen was twice as big as when the pandemic hit. Yeah. This thing hasn't got a normal. There isn't a normal. And there is no way you can look at history and predict what is going to happen in the future. Got to be a human being involved in the decision-making process. What's your view on gold? It's shiny. I haven't got it. Where's my gold chain gone? Yeah, it's a shiny metal. Platinum. I haven't got any gold, sorry. I like it. They're talking about monkeypox being the next one. Poor monkeys. They get blamed for everything, don't they? There's a joke, by the way. Prab, I don't trade gold. Right, pound odd. So the pound basically, by the way, if you want to trade gold this afternoon, which way's the US dollar going is the only question, because if the US dollar goes down, gold goes up. If the US dollar goes up, gold goes down. So which way do you think the US dollar is going this afternoon? That is your direction on gold, the opposite. Pound odd, double top, nicely on yesterday. but we're really getting a little bit stuck again here. So not an awful lot of directional bias over the last month or so. So if you look at the hourly, yeah, we have had a couple of quick short opportunities, scalpy stuff. There's one there that I got into, but really hard to pick a direction on this. It should really be short because the pound is dropping interest rates. The Australians are not, which makes them neutral to bullish, but it's just not made, no traction, no directional bias on it. Bailey is so quiet. Last interest rate change, there's nothing come out since. So we're sitting here at the moment waiting for some guidance on the pound. We just don't know which way it's going. So at the moment, I think with all the pound pairs, you can trade them pretty much in either direction, because even if we do change interest rates again, it's going to be a pause, change, unless Bailey comes out and says we need to stay more in line with the European Union, in which case the euro basically is going to dictate what the pound does. So again, we'll wait and see. Monkey Man is immune. That's true. But that means you're also spreading it. Monkeypox, yeah. UK 100 moving south. Yep. So break on the FTSE working nicely. Nearly down to 2R. I'm just going to move my TP up to 2.5R on that one. So just this little low from yesterday. If we're going to stay in rotation, we're going to look for buyers at highs and lows. So I would look at, so that's pre-market lows. So there's that level there from yesterday. So the pre-market lows, I hate having pre-market data. That's the one thing I don't like about DarwinX, and I do prefer about Forex, is you don't get the pre-market data on Forex. You do on DarwinX, because this isn't real. The market's shut. So it's speculative broker candles. But so yeah, yesterday's low is down there. But I'm not expecting massive drops or pumps today, so I'll get out fairly quick. Right. Other pound pairs. Yeah. It's very much the same. Yeah, we're very, very, very sideways at the moment. There's no directional bias. So the pound at the moment, in theory, will be pushed around by the other currencies. So the CAD and the US, if they dump today, that'll pop. If they pop today, that'll dump, vice versa. Watch for high-low bounces, really. You've got 3 weekly lows here, all in a row. That's a really good support level at 150 if we get down to there today. But there's not a lot else to really do with it at the minute. Pound New Zealand, double top bounce on Monday, seems to be holding. Obviously, the pound today is coming down because of the GDP figures. So we missed GDP by 0.2 month on month. So obviously that's weakened it, but it's not going to weaken it that much. We weren't expecting GDP really to be super hot. So, but yeah, stuck. There's nothing really, it's just nothing. It's hard to find something to get into at the minute. New Zealand dollar dropping interest rates. So again, should be bearish, should continue to be bearish. Obviously, if the Canadian goes bearish with the US, causes a range. So, decent range bounces and RSI extensions, ADR hits, all good, really. I think ADR is going to do very well over the next sort of 6 months or so, because I think with these interest rate drops, you're going to get a lot of movement off of news and then accumulations and flags and small pullbacks, continuations. ADR is great for getting those intraday. So, but yeah, there's not a lot else really you can do with anything. New Zealand, nice bounce there on Monday off of that level that I identified. Look, but it's again, we haven't gone anywhere. It's just really hard to analyze anything at the minute because it's just not doing anything, is it? So, apart from the news, which we get at 1:30. So, US dollar CAD, nice push up, but again, it's part of a pullback. So I reckon more likely that, but we'll wait and see this afternoon what happens with the CPI. So I'm not taking any more trades ahead of CPI. So I've got my exposure on at the minute, which is just flip-flopping at the moment. So focus today is euro pound and trying to get out of this. I say trying to get out of, hoping that I can get out of this. So just hoping that that pound weakness continues, which gives the euro an opportunity to go on a little bit of a rally. But you know, that high there, this is ADR today, so we've got a double top between ADR and 125 ADR, triple top even from Friday. You know, it's going to be hard to get through it. If it does get through it, it's going to take some strength, and if it's got that sort of strength, we might get a big push. So CPI, if the CPI rallies the euro and the pound drops further on the CPI, I've got an opportunity to get out of it. But that's my focus at the moment, is trying to get out of this 11-day nightmare. I'm not asking your gold chains liking, just want to know your views on gold. I just told you. Gold is a US dollar cross. You've just typed it. XAU USD. Yep. So what do you think this is going to do today? Yeah. What do you think the euro US dollar or the pound US dollar is going to do today? So whatever you think they're going to do today, the same thing will happen on gold. So it's a US dollar cross, like anything else. So which way is the US dollar going this afternoon in CPI? There's your direction. How is Darwin X for the position trader strategy? Your broker doesn't affect the strategy, any strategy. Your broker is a broker. Broker doesn't affect a strategy. Position trader strategy works on all brokers. Position trading is a way of trading. Your broker has no influence on your way of trading. Your broker is just executing your orders for you. So it doesn't matter who you trade with. If you're position trading, though, I mean, Darwin X isn't good. I don't use them because the leverage is only 1 to 30. So it's not enough for position trading multiple currencies. You could have multiple accounts and trade each currency in a different account, but you're going to need a lot of cash to do that, obviously. So position trading needs good leverage. So 1 to 200 ideally, or more. But yeah, DAX is dead. Look at it. Anybody got anything else they want to discuss today? Because there's really nothing to discuss at the moment. We've had 2.5 days of no movement on anything but yen and Swiss, which is understandable because we've had no news. Any news we have had hasn't really managed to move the market. We're just waiting for this. So this afternoon and the rest of this week will be interesting, but up to this week, up to today, it's just dead as a door now. So great trading conditions for mean reversion, which I've made a lovely profit on this week. I'm up 20. So up 20. I'm up 12.3% this week, which is nice on that scalping account. 5% risk. It's fun. It's also very scary at a point, but it's fun. How to double an account. That's why you need low time frames. Low time frames are for prop and for doubling accounts. I was reading an interesting post in Facebook yesterday. I'm on the Facebook group for Top Step and a couple of other prop firms that I used to trade with. And there's a guy posted on there the ultimate post that everybody has the problem with. And I was like, almost wanted to grab him and just go and show him the Bootcamp. But he basically said, I've taken 5 evaluations. I've passed 3 of the 5 evaluations. And I've had 3 funded accounts. Why is it every single funded account I blow within a week? I was like, it's just because the market is random and you've had a lucky streak. The lucky streak has come to an end and they only allow you 5% drawdown. That's basically it. I've been over 5% drawdown on that account and I've produced 49.7 return. because I allowed myself to go into drawdown. That's why prop doesn't work. I almost want to grab him and go, wake up. But anyway, do you currently use any prop firms? No. Because of exactly what I just said. Yeah, the reason you will never, no, I don't care what anybody says, anywhere, in any forum, any video, or anywhere. Nobody has ever shown me a consistent P&L on prop. Nobody has ever shown me 3 withdrawals in a row from the same account. Nobody. Yeah. Just hasn't happened. And the reason it can't happen is because there is never been a market that sustains the same market regime for 3 months in a row. And whatever strategy you're using to trade is going to fail. At some point, it's going to go into drawdown. It's going to lose 10 times in a row. It's going to go wrong, the strategy, because the market conditions will not work for the strategy. And unless you're switching strategy and have full knowledge of the future, you will never make prop work. You will get lucky. Yeah, but you will never withdraw from that account more than twice. That's the maximum I did when I was trading prop. I got 2 withdrawals from the same account before I blew it. Yeah, and I think I was one of the less than 1% that managed to do that. Yeah, it's just not workable long term. The only way, and I've said it many times, the only way to benefit from prop is you take 10 evaluations. You spend $500 on each of those evaluations, or pound, or whatever currency. Yeah. So you spend Who was saying I was really good at drawing? $5,000 on evaluations. Of those 10, you will get 3 of them over the line, maybe, if you're lucky, right? And what you do is all these 10 evaluations, you start 1 on Monday, 1 on Tuesday, 1 on Wednesday, 1 on Thursday, 1 on Friday, and you repeat for the next week. So you trade the same strategy on every single one of those accounts. And depending on the start day and the days that follow the day you start, 3 of those, in theory, even if you just flip a coin, will have a lucky streak which will get you over the target and get you funded. Then you use those 3 and you repeat the process with the 3 funded accounts. You start 1 on a Monday, you start 1 on a Wednesday, and you start 1 on a Friday. And you hope that the lucky streak continues, depending which day you start, for enough days to get you to a point where you can draw more than £5,000 out of that funded account. You pay yourself back, and then you wipe the slate clean, and you probably would have lost 2 of those funded accounts, and you've still got that one left that you withdrew the 5,000 from. Now, that one account, you need a lucky streak of something to pay you X dollars. That account there, you go full tilt. You go 2.5% long on the DAX in the morning, you press the button, you go away, and you come back at lunchtime and see if you've got 10% gain. If you have, you take that 10 grand out. You stop trading, you wait for the payday, whether it be 7 days, 14 days, or however many days they wait to allow you to take that money out, and you withdraw that 10 grand. Well done. You've spent 5 grand this month. You've traded 10 accounts. You've traded 3 funded accounts over a period of 4 weeks. You've drawn 10 grand out. That's how you make money out of prop, because you will never consistently be able to trade unless you use tiny risk. And I do get that bit. The other way to do it is you get a funded account, you get an evaluation account, you go crazy on it, you gamble like I'm doing over here. Yeah, I've made 49.7% in 6 days, 7 days. It's doable. I'm not making it up. That's the return. There's all my trades. Yeah. Profit 1,739. Deposit 3,500. Can't see it, can you? 3,500 deposit. There's all my trades. That's my P&L. It's totally doable. Am I making this because I'm an incredibly skillful scalper? Partly. But no, because I'm having a good run. Yeah. I didn't have a good run yesterday. That was 18% the P&L yesterday. I had a bad trade. So I had to get out of it. Yeah. So you can do that. That's how you pass a proper valuation. You go in big, you have a few trades which work out, and you pass the evaluation. When you get the account, you drop that risk right down to 1/4 to 0.5% on your 100K account, and you try to squeeze somewhere between 2 to 5% out of it a month. Yeah, that's 2K to 5K, right? And that's basically what you do. Yeah, and you try and get 3 funded accounts at that level together, and you may be able to get there. But the problem is you're not going to be able to do that every month, because you're going to have losing months where you lose 2 to 5K. Yeah, you might have 2 months in a row. I've had this year 2 months in a row where I've made losses. So I'd be down 4 to 8K. Maximum drawdown is 10K. So now I've got to build that back up. So I need another 2 good months to get myself back to break even. That's 4 months I haven't paid myself. What does that cause? Anxiety. If I'm not getting any money, what am I going to do? Well, I better over leverage a little bit because I've got to get that loss back. Boom, there goes your funded account. That's why you don't hold it for 3 months, because the conditions will change. It will cause your account not to generate the profit you generated in the evaluation, which makes you overtrade. When you overtrade, you blow the account. Targets are set at 5% daily and 10% daily for a reason. These are the tilt points. It's just what happens. So that's why I don't trade prop. You're better off sticking all the money in one account of your own and doing what I'm doing over here. Stuck 3.5K in that account. I'm now sitting on 5,278. I could stop right now and take that money out. But what's going to happen next week? What's going to happen next month? I don't know. That's going to go into drawdown at some point, because I'm not going to have the same run. I'm going to have a losing streak at some point. Doesn't matter. Every trader on the planet, guys that trade prop for big prop firms like SMB Capital, yeah, they will go into drawdown by 30, 40K in a month. They will go wrong. Then they will pull back a 40, 80, 100K month. The ones that make it accept the drawdown. Yeah, I'm sitting in drawdown right now. I accept the drawdown. It's what happens all the time. If I didn't have that, I wouldn't have an opportunity to make that, because this is that waiting in the oven to be cooked. Got to have this. They know in prop that they say that's bad. So if that's bad, why do all the banks do it this way? Yeah, why do all the institutions trade this way? Why don't they have a 5% daily drawdown limit and a 10% monthly drawdown limit? Because you can't do it. It's not how it works. The market isn't going to stay in the same condition for you for that amount of time and then go, oh, hang on, Lee needs this to push. Everybody press the buy button. They don't even know you exist. So prop's great for playing and fun and for making a quick buck, but you can also do that at the racetrack. You can do that in the casino. Yeah, but it's much nicer to do it from the home. But don't expect to make a long-term living out of it. And you know, there's bots out there. Go and buy a bot. There's loads of bots out there all pass evaluations for you. You know, people have contacted me many times and said, I've got a funded account, 100K. I need an EA to trade it. Why did you not use the strategy that you passed the evaluation with? Oh, someone else passed it for me. So you've basically just been given 100K and you don't know what to do with it. It's all good fun. I still think relatively safe but quick account flip is H1 hedging on the MRA. Yes, it is. The MRA EA or the position trader EA H1 hedging strategy is a fantastic way of flipping an account. But you know, compounding is, you know, is totally doable. I've done it many times. It doesn't, you know, it's not hard. You can compound an account this afternoon. Yeah. If you want to compound an account this afternoon, right? And I can do this right now. I won't do it. But what I could do right now is go and deposit 1,000 in account 1, and in account 2, I deposit 1,000. Yeah. And at 1 o'clock this afternoon, in account 1, I buy US dollar CAD, and in account 2, I sell US dollar CAD. Yeah. And then tomorrow, I'll do a video showing you how I doubled that account in one trade. I won't show you the video on that one. I'll show you the video on that one. Easy, isn't it? But I could also walk into a casino this afternoon and put 1,000 on red and 1,000 on black and win in the same way. It's not making money, is it? It's not got any long-term return on investment. There's no alpha long-term in it. It just doesn't work. There's no edge. You can't have an edge in a 50-50. But you will have the hedging strategy works on the premise that the market moves in rotation, which it does. That's the edge of the hedging set file, is assuming that the buyers will take profit on the sells and the sellers will take profit on the buys and the buyers will take profit on the sells. If that occurs, you have 100% strike rate in either a ranging market or a weak trending market. In a parabolic or a strong trending market, this strategy fails. That's where the drawdown control comes in. So if you look at euro pound, this week, if you'd have been trading the H1 hedging set file, but switched it down to 15-minute time frame, and you used let's say you used 2% risk, 2.5% risk per trade, you would have killed it. Literally every day you would have been extracting somewhere between 2 to 5% a day. But how often does the market do that? Does it for a short period of time, doesn't it? And you go, oh, I found the Holy Grail. You die. That's where you pick up the Holy Grail or the head and you forget the bag of sand and all the arrows hit you in the head. Indiana Jones. Basically, a 100k funded account is a 5k account. Yeah, exactly. Yeah. So if you trade a 5k account with 1% risk, it's going to take you a long time to make any money, isn't it? A long time. So yeah, whatever your drawdown is, that is your account size. So if you get a 100k account with a 10k max drawdown, you're trading a 10k account. So you need to trade that 10k account with relevant risk for a 10k account. Yeah, but because they give you 100k, everyone trades it with a percentage of the 100k. They find it then too slow to make money, so they up the risk, and then it pops. This is the smoke and mirrors of prop. And don't get me wrong, I have no problem with it. I traded prop in here for 2 years, year and a half, didn't I? Live every day. I was trading prop every day. This is where we started trading the SIH and ORB strategies. Yeah, I developed these strategies for prop. This is TP hit on FTSE, hedged on the DAX. I'm just going to close this out and be done today. So £400 closed out on FTSE, 300 hedge, so 100 clear profit for the morning. I'll let that hedge continue. To get out of the hedge today, we're going to need either a yesterday's low test or an ADR, which is a yesterday's high test as well. So basically we need an ADR hit today, pretty much. So I will close, if this hasn't hit ADR by 1:30, I'll be out. I'll shut it and take the 300 loss and obviously 400 gain, which gives me the profit for the morning. But yeah, this is why I developed these strategies, because when COVID hit and prop was starting to really get popular, everyone's sitting at home, weren't they? So it was when we were going through the phase where the FX market, was really flat. So we were looking at every stream we were coming in here, weren't we? And I don't know if anyone was here, but we were coming in here and there's the same thing every day. There's no RSI extensions. There's no ADR extensions. There's no weekly extensions. There's nothing to do. So drop down 5-minute time frame. So I started scalping, which is why I developed the Price Action Toolkit. So the PAT toolkit, I started scalping 5-minute time frames again because I needed an income. I needed to make some money and I needed to get revenue in. So I developed the Price Action Toolkit so that I could scalp 5-minute time frames. Then we moved from 5-minute timeframes to stock indices. So I developed the opening range breakout strategy and the SIH. And these are not new strategies. Opening range breakout is what I used to trade in stocks 10 plus years ago. So it's not a new strategy. It's been around forever and it still works, as you can see, when the market conditions are right. So, and this is what we were using in prop, and it works brilliantly. Yeah, people pass prop accounts with it all the time, but then the following week they go into drawdown by 2K, and they're like, "Well, why is it not working anymore?" It's not working because the market has no volume at the open. This strategy is a momentum breakout strategy. It works on momentum breakout. The DAX has no momentum breakout, therefore it hasn't worked. The FTSE has a momentum breakout, therefore it works. So if you trade, this is a perfect example on prop. You start on a Monday, and on Monday we have a momentum breakout. Tuesday we have a momentum breakout. Wednesday we have a momentum breakout, and Thursday we have a momentum breakout. You pass your evaluation. Friday you start your funded account, and there's no momentum, so you get hedged. You make a loss. Monday the following week you get a momentum breakout, and you get back the loss, and you make a little bit of profit. Then Tuesday, Wednesday, Thursday, Friday that week there is no momentum. You make a loss, a loss, a loss, a loss. What are you going to do? Scrap the strategy? No. You're either going to blow the funded account because it's not going to allow you enough time to get back to the momentum to get all the money back that you've lost and then start making profit again. It's going to just take your funded account away and say, sorry, that didn't work. Go back to step one. Nothing wrong with the strategy. The strategy has a long-term edge. The edge has to play out over a long term. It's not going to work every day. It's not going to work every week. It's not going to work every month sometimes. But over a period of time, as long as the stock market has momentum at the open, which it does more often than not, 3 out of 5 days, it'll work. You just got to let it play out. And prop doesn't allow you to do that. Which is why I say if you start one on Monday, one on Tuesday, one on Wednesday, one on Thursday, and one on Friday, take 5 evaluations in a week, the days that you have momentum breakout, you'll pass. So if Monday and Tuesday are dodgy, but Wednesday, Thursday, Friday are really good, the account you start on Wednesday will probably hit by the end of the week. The one on Thursday will be well on its way, and the one on Friday will have had a good start. But Monday and Tuesday, they're probably going to be about break even. Because making money in prop and passing prop has nothing to do with strategy. It has to do with the day you start the evaluation and whether the strategy fits the market conditions on the days you trade. And you don't know what the market conditions are going to be, therefore you can't pick the right strategy. So you trade one strategy all the time with an edge and let the edge play out over time. That's trading. But that's not what people in prop want to do. They want to get rich quick, don't they? Which is not going to happen. FTSE's broken down. So target, if you are still short, yesterday's low. DAX target, initial target is going to be this pre-market low, which isn't really there. So I would say go for that. So my target to the downside today is actually bang on, isn't it? I need to move it up. So I'm just going to move my target up just under 5R. So what I'm looking for is market breakdown and then limit order triggers at low of yesterday to get me out of the trade. However, if this comes down like this and it doesn't stop, I will probably move that down. Again, this is stuff that an EA can't do. Holy crap, that's coming fast. Something might have happened. I need to reevaluate this. Yeah. This is why your EAs that trade for you automatically on autopilot are never going to be as successful as you are, because you've got to be able to identify something's not right in the market. Something wasn't right in the market yesterday. Quite what? We don't know. I suspect they're pulling money out of the stocks ready to pump it into the US dollar today. But if that doesn't happen and the CPI numbers come out negative, they're going to put the money back in the stock market this afternoon. And the US dollar is going to drop, isn't it? Yeah, which is why this is always inverse to the US dollar, or this is inverse to the euro, this is inverse to the pound, and the US dollar is inverse to all the US indices. Sounds better just to trade the 5K in a personal account. Exactly, Laurie. That 3.5 grand I just stuck in there last week, I could have bought 10 50K evaluations. Yeah. And had the hassle of trading 10 accounts, the pain and the psychological problems of trading 10 accounts, the panic of trying to manage them all around news, and finally getting through to whatever I've got left at the end, and then having to restart the process for another week to see if I can replicate the ones that were profitable that I tried in the first week or 2 weeks, depending on how long it takes. So let's say I'm 3 weeks in and I've just got my first funded account, just doubled that in a week. What's the point? All you're doing is you're lining someone else's pocket with money. If you've got money to spend, spend it. But don't give it to someone else and pretend you're trading 100 grand. You're not. You're trading 5 or 10. Yeah. And you're not allowed to go into drawdown. You've also got all these other stupid rules, like the single direction trade. If you take a trade in along and then you decide to add another one in to average into it, waiting for the move, you're not allowed to do that. That's martingale. No, it's not martingale. It's the same lot size. No, but it's single direction trading. Where did you come up with that rule? What's single direction? No one's ever said that to me, ever. In 16 years I've been trading, no one's ever said you can't trade more than once in one direction. Nobody, ever. So if I go long and I go into profit by 2% and I add a second position, you're going to shut my account because I took true trades in the same direction? Yes, you shouldn't be adding to a position. Why? Because that's how we make money? No. Positive risk reward, that's what you need to focus on. Everything is geared up against you. Everything that makes a successful trader, prop, rip it all out. You can't use EAs. Why? Because EAs give you an edge, because they monitor the market for you. So all these good trade opportunities that you would normally miss because you're a human being and you walk in the dog, the EA is going to get you in. You're not allowed to use that. Nuts, isn't it? Anyway, I'm going off on a waffle today, aren't I? I would like to take this opportunity to say thank you for the live rooms and your insights. It helps me as a beginner to gain a better understanding. Excellent. And to put things into perspective. Yes. Your perspective will be warped by people. I've forgotten his name. Who's the guy with the big teeth and dripping in gold on YouTube? Brian would know. He's not here because he does the New York session. Mamba, that's it. The Mamba FX prop firm? No. Has he got a prop firm now? Anyway, yes, your perspective will be warped by people like this. Yeah. He looks more like a cage fighter than a trader, doesn't he? But, yeah, this sort of stuff is just destroying the industry. And it's been destroying it for years. But, this isn't trading. There's one really easy rule in Forex. If you're just in trading in general, if you're starting out in trading, yeah, if anybody ever shows you their mobile phone and links that in any way or shape to trading, run. Because there is no trader on the planet that uses this thing. Not that's successful, anyway. There's not one. Not one. You can't do fundamental analysis. You can't do technical analysis. You can't do anything on a mobile phone, but press the buy and the sell button, probably with a fat finger and get it wrong. And that's it. That's all you can do on a mobile phone. Yep. Oh, no, but it gives me signals. I get push notifications from MT4. Really? Right, well, go and look at your MT4 terminal then. Don't look at your mobile phone, because if you're going to confirm and do the analysis that signal has just said there's an opportunity for, which you may or may not want to take, you ain't doing it on a mobile. Yeah. Anybody as well that's showing you 7 screens. You've only got one pair of eyeballs. How many charts are you looking at a time? 1. Yeah. Even if I've got 4 charts up on the screen, I can only look at one at a time. If I want to now look at what's going on in the 5 minute, I go down there. I'm now not looking at this one anymore. I'm looking at this one. If I want to know what's going on in the DAX on the 5 minute, I look here. I'm not looking at the hourly until I move my eyeballs up here. Yeah. It's one screen. 4 charts. I'm only using one at a time. If you've got 6 monitors up, all you're doing is you're getting an overload of information which makes no sense. Run away from those people. Anybody that tells you flipping a coin can make you money in the markets, listen to them, because they've understood that this thing is completely random and you've got no way of predicting the future. Unless someone comes up with a time machine, then I'm interested. The time machine trader. Now that's a good idea for a YouTube channel. The time machine trader. And all he'll do is he will show you hindsight trades that he went into the future to find out the results for and show you 100% strike rate. But you can't prove he went into the future, but you can just see his 100% strike rate. Very easy to do that, isn't it? I run 2 accounts. I press the buy button and the sell button every day on each account. One of them is going to be right. I'm just going to show you those ones. Sound familiar? Karen, I stopped trading for the last 6 months using market reversal alerts EA. I'm back. So the current trend is the latest position trader EA. No, use a market reversal alerts EA. You don't need the position trader EA. If you're using MRA EA, use the MRA EA. There's very little difference. One is the only reason I built this was to simplify the market reversal alerts EA. This is a completely simplified version of MRA. Yeah, and it's got buttons so you can take trades whenever you want and then position trade those trades. Yeah, so but if you don't want to do that, just use the market reversal alerts EA. It's just as good, just different. Even martingale gets a bad rap. It can be profitable with drawdown control. You can. The trouble with martingale is even if you use drawdown control, yeah, if you take a 1, a 2, a 4, and then you go, right, when I get to 8, I'm going to shut 1. You're still using 16. I'm going to shut 2. You're still using 32. That there is a margin call. Yeah. Shutting older trades doesn't stop the margin call. Margin call is what shuts your trades. Shutting your trades shuts your account. Martingale is just not viable. It's just not. What I run, a hybrid is viable sometimes. Sometimes even that gets us into trouble, doesn't it? So using a small lot multiplication when the probabilities increase isn't a bad thing. It's the same thing as running higher risk on higher probability trades. Yeah. So, you know, if you look at ADR as an example. Yeah. So there's your ADR levels: 100, 125, 150, 175. 200, 225. Yeah. So if you get in short at ADR, the probability is 42% that the market will continue against you. Yeah. If you get in at 125, it drops to 23% that the market will continue against you. When you get to 150, it drops to 12% the market will continue against you. There's nothing wrong with using a higher risk on that trade than that trade because the probabilities are higher. Yeah. So in that respect, increasing your lot size isn't a problem if it's all done within the same sort of move, if you like. But with martingale, all you're doing with martingale is you're basically doubling your risk every time you get it wrong indefinitely. Yeah. With this, if you were to take, I'm only going to trade 175 ADRs, but I'm going to trade 175 ADRs with 3% risk instead of 0.5% risk. So you won't take any of these trades, but you use 3% risk because the probabilities are much higher. You're going to make much better money. Your strike rate is going to be way, way higher, but you've still got to have a backup plan. So doubling or adding a lot multiplication to that initial high risk is going to make even more risk, which is, again, not good. So stop loss based strategies, you can test all of this with the position trader EA. You can use, in the position trader EA, you can use the stop loss still. You just set 100% drawdown control at whatever percentage in drawdown you go to. So, I have no problem with stop loss strategies. Yeah. If they are done on high probability and you're not fixing yourself to a positive risk reward, which is where it all goes wrong. And your stop loss is a decent distance. The problem I have with stop loss strategies is the way that everybody does it. let's go short here and put our stop loss there. It's ridiculous. Yeah. If you're going to go short, but give the market room to breathe. If you're wrong, let it go up. And if it comes down and it ends up here, close it there today. Don't stop yourself out there and take a loss just because the market does what it does every day, which is go up and down. I can guarantee you, if you go short here, it's going to go up and down. The only way you're going to make money is if it goes down. If it goes up and then it goes down and you're using a stop loss, you lose money. There is no stop losses on my trades on this account. This scalping account that I'm on over here, I'm scalping. I have not used a stop loss on any one of these trades. Look at this NASDAQ trade. No stop losses, right? Was I right there? No. Was I right there? No. Was I right there? No. Was I right? Yes. Yeah. Let the market breathe. It's not going to be right every time you press the button, but it will be right at some point with a high probability if you've taken a trade that has a high probability. You're just not going to get the entry correct because you can't. Because unless you have that crystal ball, you don't know which way it's going next. Hindsight trading. I thought you were going to mention he who should not be named. No. I've gone soft on him now. I think the whole market's gone soft on him. ICT. I mentioned his name. But yeah, it's just he's been outed, isn't he? He's people know it's not real. It was a really good run while it lasted, but you know, I just given up. I don't care. People can come and talk about him now if they want to. I just will go, meh, load of rubbish. Prove it. Somebody trade his strategies and come back to me with a 6-month positive P&L. Then I'll sit up and I'll listen and I'll go, yep, you're right. He's a genius. But no one can come back to me with a positive P&L. A lot of people come here after they've done ICT and look at what I do. And then they go, shit, ICT actually works if you remove the stop loss. But then again, every strategy works if you remove the stop loss because you give the market a chance to prove you right. You can make anything work without a stop loss, can't you? If you were to go and take every 200 ADR extension in a year without a stop loss, at some point over the next 24 to 48 hours, you'll be in profit. And as long as you accept drawdown as your friend, as being a trade ready to become profitable, you make money. And that's the biggest bending of psychology that people have when they start position trading is, holy crap, I'm going to lose 4.7% because I didn't use a stop loss. No, your account is using its drawdown, its capital, to make you money at some point in the future. This isn't a loss. If you were trading the Aussie dollar yen as a mean reversion trader, you using RSI, you went long, you stopped out, 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 or you stopped out, and you're about ready to get in long again. Yeah, so you've taken a 4% loss. I haven't taken anything yet. I'm sitting in the trade. I'm waiting for the market to do what it will inevitably do, which is take profit on the leg. So this is waiting to become profit. That's all it is. It's capital. But this is the whole thing about, I was going to do a video the other day about looking at trading and why are you doing it? The question, why are you trading? Why are you doing this? Why are you here? Yeah. Do you want to make this a full-time income or do you just love trading? Because there's a massive difference between the two. If you love trading, you're never going to stick more than 1 or 2K in an account and you're going to muck about. Yeah. And it doesn't matter if you lose that money because it's probably money you can lose. If you need to earn money trading or you want to earn money trading, you're going to take it more seriously. So you need to treat it like a business. So these people who are here because they love trading, they love gambling, they love whatever, just love getting it right. I love the thrill of getting a trade right and it running and going, wow, look at that. That was amazing. I don't care if I lose it over the next 5 days. I love the buzz. There's nothing wrong with it, is there? You could get people go to racetracks, people go to casinos, people do play poker to get the same buzz. If you need to make money out of this, yeah, this is a business. So equate this here to you setting up a business on the high street tomorrow in a shop. You've got to get the rent for the shop, which is going to cost you 12k for 6 months rent or something. You've got to employ staff, which is going to cost you 15k or something for that 6 month period when you're starting your business up. You're going to buy stock. It's going to cost you 25k to put the stock in there. Probably going to cost you 10k to fit the shop out. Yeah. So what's that? 10, 20, 30, 40, 50, 62k. Right. Day one, you open up the doors of your shop. People start to come in. You're 62k in drawdown. What's wrong with me sitting here in 6% drawdown on my business right now? Nothing. This is an investment into a future profit. This is an investment into a future profit. Now my doors are open. I've got no overheads because I've factored in my staff, my stock and everything that I've got outgoing. The only thing I've got to do is restock my shelves and pocket the profit. Startup capital in trading is no different. If you've got 10k, 50k, 100k, whatever you've got to start with, that is there for one reason and one reason only, to be used as drawdown to generate alpha profit on your account. Don't be scared of it. It's part of the game. It's part of the job. You will have a limit that you will go, that's not right. I need to do something about it. And what's the worst thing right now that I could do to that? Close it and bank a 4.87% loss on my account. Oh, well, whatever. Didn't work out. That was a loss. What does it mean? My profit's reset for the month. I've still got 2 weeks, 3 weeks left to get out. Get more profit in the bank. Yeah. That's the way you've got to look at it. If you're doing this because you want to earn either a second income or an income, you've got to treat it like a business. Businesses do not go, okay, I'm going to get that shop, but I'll give you the money for the shop and the stock if the business succeeds. It's not how it works. Why do you think you can start up a prop account with 100 grand on day one with no experience and expect to run a fully fledged proprietary trading firm? You can't. But people think they can because they got lucky. Yeah, that's what the boot camp's all about. But I was going to do that video because it's interesting because somebody that's a regular every now and again in Telegram of messaging me and on MQL Marketplace. They've been messaging me for years, and I asked the question quite a few months ago, why are you wanting this information? Why are you doing this? And he said, I don't know. I just like it. I was like, what do you mean you just like it? And he's been liking it for 10 years, but he's never done it professionally, never done it. It's a hobby. Yeah. My answer to people that have got a hobby attitude and my answer to people that have got an income attitude have got to be different. Because if you're doing this as a hobby, go and find out the information yourself. Yeah. It doesn't really make any difference. You're not going to benefit from anything, are you? You're just not going to you're spending money as a hobby. Yeah. You go buy video games, buy a new video game every month and spend £60 on a video game every month. You're going to spend 800 odd quid in a year doing that. Why not just go and spend 800 quid on indicators and do that as a hobby? Same thing, isn't it? If you need to earn £2,000 a month to pay your bills, it's a totally different answer to that question. You've got to be treating it in a totally different way. Yeah, pressing the buy button now has no impact if this is a hobby. Pressing the buy button now overexposes me if this goes against me as a business. So I'm not pressing it because my statistics and my analysis has shown me that that is too close to the previous position. It would be a bad idea to do it. However, if it's down here, it would be a better idea to do it because it brings this line down closer to my exit. I know that because I've tested and analyzed it. But if this is an account, it doesn't match one, it doesn't matter, does it? Press the button, press it again. Press it 10 times today. It doesn't make any difference. That's what it's all about, the bootcamp. And can you suggest me what product I should buy to get started? No. It's not about buying products. It's about learning how to trade. The best for me, if you've watched the bootcamp, yeah, you know what indicators I use, recommend, and why. Yeah, and they all fit the strategy. So everything you see on my chart has a purpose. The RSI is my market condition indicator to tell me that a market is stretched. That gives me an area of interest. The support resistance propulsion indicator shows me levels I can target and levels that may act as resistance, which are areas that I can get into. The signal indicator, the market reverse alerts indicator, tells me to get in. So if you want to trade all of my strategies in the way that I trade them, you need the ADR indicator, the market reverse alerts indicator, and the RSI dashboard. The RSI dash and the ADR dash as well are going to tell you manually when there is a setup. So Euro Yen is now extended on the 4-hour RSI 10. There is an opportunity to long that. Yeah. If you're going to trade manually, you need lots of stuff. If you're going to be automated and just allow the EA to take these opportunities for you, get the position trader EA or the market reversal alerts EA as a one-off purchase and let that do it for you. So it will get you into the trades. And then you gain experience by using and being in the trades. You don't have to do all the analysis to take the trades for you. So, you know, the RSI, H4 RSI strategy is RSI extension. And then you drop down onto a lower time frame, M15, and you wait for a reversal alert. That is your entry long with the market reversal alerts EA. In this particular case, with the position trader EA, it's exactly the same entry, which is why there's not a lot of difference between them. One's just more versatile, in my opinion, than the other. But the EA will automatically execute the strategies for you. If you want to manually do that, you buy indicators. Yeah. You don't even have to buy indicators. You don't need this dashboard, the RSI dash, for example, because you can open up your chart every 4 hours and go, not extended, not nearly, I'll watch that, not, and you get the point. This is going to take you 2 minutes, 3 minutes every 4 hours to do this. Yeah. And then basically, if you find something of interest that's extended, you basically go, all right, that's excellent. I'll pop that up on a monitor and I'll wait for a bullish engulfing, a hammer, or I'll wait for a big candle that makes a propulsion gap, or I will wait for, I'll draw a line on the chart and I'll wait for it to break above that line. However you want to get in, it doesn't matter. Yeah. Just get in however you want. But the tools that you use are the tools that you want or need or that fit you. So everybody's different. There's a lot of indicators out there for free as well. You don't need to buy my indicators. Yeah, I say in the bootcamp, you don't need to buy anything. I teach it all for free. Yeah, I have the products that I use because I like the way that mine work. There are other ADR indicators out there. There's other RSI dashboards out there. There's other RSI alert indicators that have divergence on. There's wide range bar indicators. Yeah, there's other support resistance. There's all sorts of stuff out there. You can use and formulate your own strategy. Yeah, position trading is a methodology that can be applied to any strategy. If you use Bollinger Bands as your condition indicator, and the signal indicator is an open below and a break above the Bollinger Band. So the Bollinger Band having a close below it is your condition. The market is stretched. The open below and close above is your signal. You've got a condition and a signal indicator built in to the Bollinger Bands there. Totally free, comes with MT4. And if it doesn't work, add another one and you position trade. That's all it do. All we're doing is we're turning a strategy into a position trading strategy. Why does position trading need this much leverage? Because you need to take multiple positions. Happy chappy 1,000, but how come you lost so much money? I haven't. Blah, blah, blah. Why are you in here then? Not seen you before. You're obviously your first day. Welcome aboard, Happy Chappy. If you want to learn how to trade, you're in the right place. If you want to come and troll me, I'm just going to ban you. Why position trading needs leverage? Because obviously you've got to take multiple positions. So if you've got low leverage, you're not going to be able to get the risk on. So on a 1 to 30 leverage account, by the time you're in 10 to 15% of drawdown on the account, you're going to start getting margin called. So he's leaving. Good. Okay, I'll get rid of him anyway. I'm banning you. Give me a chance. There you go. You've gone. Bye-bye. So yeah, basically just need more leverage. If you don't want to position trade, you don't need leverage. So for scalping and the scalping strategy, I don't need any more leverage than 1 to 10, 1 to 30, because you're only going to be taking single trades at a time. But if you're holding a position over a period of weeks, possibly months, if you get squeezed, you've got to be able to add those positions. So if you were to get into, let's look at the Aussie yen. If you get into the Aussie yen here, yeah, and then it pushes down against you, if you cannot take the next position because you've got no margin, or the next position because there's no margin available, you are stuck in 3 positions and you cannot move your average down to give you the exit opportunity. So you run out of the ability to exit the position. And all that happens is if it continues against you, these 3 positions just go into more and more drawdown and you just won't get out of them. So you have to shut them, which is nothing wrong with that either. Yeah. And again, the position trader EA has the ability to close positions after a maximum amount is reached now. So if you set that to true and 6, if you take a trade and a second and a third and a fourth and a fifth, and when you take your 6th, it will shut that one, which means your average gets closer faster, but you take more loss. So you will be in less drawdown overall on the position. Again, personal preference. There's no right or wrong. You know, people that like that bloke, whoever it was that came in, yeah, they're still losing fortunes because they're using stop losses. Yeah, Happy Chappy 1000 cannot provide me with a positive P&L. He's just a troll. If he was, he wouldn't be in here. He'd be making a fortune. Yeah, you know, it's just, you've got to have your own way of managing drawdown. Yeah, so everybody's going to have different. And again, it says in Bootcamp. Yeah, you go and watch the Bootcamp. It teaches you in there how you're all going to have different. Everybody's going to have a different level of drawdown that they're comfortable with, a comfort level, because your comfort level is based on your experience. It's based on your personal psychological levels that you do not want to go beyond. So if I've made a load of money in 1 month and I'm sitting in a big drawdown, I could close out 50% of it comfortably. Yeah. But if you are in a different situation in the same amount of drawdown without the P&L, your decision-making process has got to be different. But your decision-making process is yours. And this is why I say, if you get the position trader EA or the market reverse alerts EA and just let it automatically trade for you, the only thing you have to worry about is that. You don't have to worry about analysis. You don't have to worry about any alerts. It just trades for you, and then you see and feel what it's like to be in those positions, and you deal with that. You get used to being in drawdown. The hardest part of switching from a stock-based strategy to a DCA strategy, which is, again, all pensions, hedge funds, institutional traders use DCA strategies. Yeah, the difference is psychology. You're removing the death by 1,000 cuts and replacing it by huge weight on my shoulders. Yeah, it's no different. We're still in drawdown. We still make losses. Yeah, like Happy Chappy's pointed out. I've had a couple of losing months this year. But it's normal. It's trading. Unlike most people, I'm here telling you about them. Most people are trying to flog you a course and hiding it all under the carpet. Happy Chappy probably is in the guy with the blue Porsches group, I bet. It's what it's like, isn't it, this industry? But it's just adjusting your psychology to work around being in drawdown, running a business with costs. Yeah. If your costs are constantly going out the door and the profits aren't coming in because your strategy doesn't suit the market condition, you're just going to lose all the time. So by doing the analysis, the problem with doing the analysis is that you will get scared when you do the analysis of what's over there. The EA doesn't get scared. It just does what it does because it knows the edge is there. So for buying products, it's entirely up to you. But I would go more EA than indicator, because EA is automation of the strategy. So it takes the skill element out of it. However, you've still got to manage exposure. So there is the element of needing to keep on top of that. There is always a human being involved at the end of the day. So it doesn't matter which way you go when you start. If you want to go indicators, you want to go EA, or you want to go both. You want to see the stuff on the chart, get the alerts, and have it do the automation for you. Yeah, best of both worlds, isn't it? But there's more stuff to get. But it's personal preference, totally personal preference. I started out with nothing. So I started out basically manually every 4 hours. Like I just said, I'd come in every 4 hours and every hour, and I would check the charts. And I'd go through. I had an alarm set in Outlook. I started out when I started position trading, or I changed over to position trading. I just started out with an Outlook alarm. Every 4 hours, I get an alarm in my Outlook, which would say, go and check the charts. So I'd open my terminal and I'd check my P&L. I'd come in and I'd flick through the charts. And then I was like, this is ridiculous. I'm just spending all this time every 4 hours doing this. So I built the dashboard. And then I was like, well, I can minimize that. And the only time I need to maximize that is if it goes ping. So that cut down my trading time by an infinite amount. So I would go, oh, Euro Yen's extended. I just had an alert on it. So I'd have a look at it and go, not quite ready yet. I'll be more interested there. So I literally would just go and stick an alert there and shut the chart. And then that turned into, why am I doing all this? Why don't I just build an EA so that when the condition is met, it just enters me? Then all I've got to worry about is what happens after the trade. And that's where the evolution came from, completely manual to full automation. But full automation is only there for me to then do the job, which is managing risk. Your job is managing risk. That's it, as a trader. Yeah, because you have no control over the market direction. There's nobody on the planet. Happy Chappy will tell you that he knows which direction the market's going this afternoon. Yeah, if he does, I'd like him to come on board and become the guru, because that's obviously why he's here, because he knows all about which way the CPI is going this afternoon, because his time machine works. Unless you haven't got that time machine, there's nobody sitting in a central bank right now either that knows which way it's going this afternoon. The only people that know which way it's going this afternoon are the people that generate the CPI report, because they have the information. When that information comes out, they still don't know 100% which way it's going, because the way that the market participants react to the number is what makes the market move. If Citibank this afternoon have a load of longs to execute and Barclays have a load of shorts to execute, they will both do it at the same time at the CPI. If there's more Citibank than there is Barclays, it's going that way. If there's more Barclays than Citibank, it's going that way. Where it goes over the next 3 months is determined by the CPI figure and next week's inflation number, interest rate number. The way it goes in the next hour when CPI comes out has nothing to do but weight of orders in banks. So even if you've got a time machine, yeah, it's got to go forward quite a long way for you to determine what the actual outcome of this afternoon's news is going to be. Anyway. What's your call on the FTSE? I'm out. It's done. You missed it. As Happy Chappy just said, I lose loads of money by trading like that. What dashboard is on the right of your screen? Happy channel? Oh my God. Everybody's happy today, aren't they? Which one? That's the RSI dashboard, that's the ADR dashboard, and that's the Trade Manager dashboard. They're all on the website. Everything you need is on the website. There's links going past in between all your chats. All these links that are going in the chat, look, they're links to the website. Just go and click there. Everything you need is on the website. All info is there. Yeah, education, EA's, indicators. God, we haven't had a troll for ages. It's quite fun, isn't it? Do you know who hasn't been back for a while? Can't remember the name. No, forgotten their name. What was the signal service that used to come in all the time, spamming the channel? Don't know. Anyway, that's going to bug me now. I'm not going to remember who it is. Travellery log. I know you do not like this, but do you have set files for SIH? Yep. Well, default. So with SIH, if you just reset to defaults, so if you just hit the reset button, yeah, okay, it will get in with a fixed lot of 1, yeah, TP at 2R and 5R. The only thing you've got to do is the times, yeah. Take pre-market and post-market. So this is exactly the same as I use. Minimum range 0.1, 0.2, exactly the same as I use. Yeah. So this is the default set file is what I use. Hedge recovery set to true at 0.2. Yeah. So the set file that I use is 0.5 hedge recovery, but that's because I am in manually doing this. So if it gets to 0.2 as a hedge recovery, I may well shut it out, but it's using hedge recovery. Yeah. It's using 0.1, 0.2. The only difference is that I'm using a 0.3% equity per trade. Yeah. And I have my TP set to 3 and 5. Now you see me as today in here, shut that out at 2.5R. Why? Because of that. So I got out there. The 3R target was there. It was hit today. But there's nothing wrong with setting using 2 or 3. They're all right. They're all wrong. I don't know where it's going. Yeah. What we're looking for is our reward is higher than our risk. That's it. So we're looking for a positive R on the first position. So the defaults are fine. But like with everything, in my opinion, you need to trade. Yeah, the SIHEA is used because I cannot calculate the lot size, the range size, and enter the orders into the market fast enough at the open to trade. That's why I use automation. You can trade the strategy manually if you want to. You could use the position, you could use a price action toolkit, or you could just basically use these buttons. But you've got to figure out what the lot size should be based on the range so that your risk is correct, etc., etc. So, but at the end of the day, the EA takes the trades for me. It took that trade. I wouldn't have been able to work out what that range size was, whether or not it was above 10% of the range, and what the actual exact lot size should be to risk 0.3 over that distance in the time it took the market to break out. Yeah. So use whatever settings you want. And if you've been in here any period of time, you'll know that I am constantly adjusting them. So like the DAX, I've just moved the TP on the DAX from 5R, which is the default in the EA, to 4 and a bit R, because that is there. So it makes more sense to be here than here if the market is going to bounce at those lows. If the limit orders are going to trigger, which is the reason for me moving that up, then I want to be a little bit higher to make sure that I get TP'd. The market may well bounce off of that and then slam through it and then reverse, in which case leaving it at the 5R target would have been absolutely fine as well. I don't know what's going to happen. Helpy FX, that's it. Monkey Man, you've just remembered Helpy FX signals. That's why I was thinking that happy chappy might be obviously a spammer, because obviously it's always the happy signal services that scamming people. Those are the ones, they've always got those sorts of names, haven't they? Helpy FX. Wonder if they're still going. Let's have a look. Helpy FX. Yeah, still there. Oh, I got an orange exclamation mark. My oh, I'm depressed. The scammers have gone. The signals didn't work. Everybody get your violin, get tiny violin out. No, unfortunately. Oh, Helpy FX is gone. Oh well, never mind. Sad face. Carry on. There'll be someone to replace them. It's like head of dictatorships, isn't it? Get rid of the dictator. There's another dictator waiting to jump into the dictator's place. It's the same with signal services. Yeah, and scammers in Telegram. You constant people saying somebody's pretending to be you in Telegram. I know they've been doing it for over 5 years, and every time you ban one, they just start again. Poor old Helpy. I might set up I might buy the domain. I wonder if the domain's for sale. I might set it up. Helpy FX signals, and yeah, it's a good business model for a while, and then it obviously all goes wrong. So anyway. Yeah, so that's all I was saying. Just use the defaults. Yeah, if you do any testing in the back tester with the defaults, or you adjust those settings, the results will be based on what has happened. What has happened isn't necessarily what you would achieve as a trader. So all you're looking for in a back test is going to show you what the good things to do and the bad things are to do. So if you set in the EA your targets to be 5R and 10R, you're going to find that has an impact on the results. And the impact will probably be the vast majority of the days you will be hedged. Yeah. If you set it to 1R and 3R, you will probably find the strike rate is incredibly high. But the profitability will probably be low, because if you get hedged 3 out of 5 days, that's going to be a 1R return, and you're probably going to get not get to the point where you'll get out of those trades. Or the other thing you'll find is you'll have massive losing days, which will be like 10 or 15 times the normal day's profit. Because what will happen is the market will hedge at the open, scream down to 3R, take out your TP, which will have moved to there on your hedge, and will not trigger your long, and it will scream down to 150% of ADR on that day because it was a news event. Yeah, and you will take a huge loss on the account. A human being wouldn't do that. A human being would go, holy crap, the news has sent this into free fall. I'm going to lock that hedge in, and I'm not going to use an aggressive exit today. Yeah. So all backtesting with any EA will ever do is show you what would have happened if you had been an idiot, if you'd have been a EA. Yeah, and you're not an EA, you're a human being. Yeah, there's news coming out at 1:30 this afternoon, right? So if 1:30 this afternoon, I look at the DAX chart, yeah, and the DAX chart is like this, and this is the open at 2:30. I'm not trading because they've done all the volume. We've moved over 100% of the average daily range, and the US dollar is collapsing. I'm not going to try and hope that the US dollar can collapse by another 100 ADR at the open, or that they will undo the entire move. The volume's gone. The opening range breakout strategy is a momentum breakout strategy. The momentum has disappeared. That day, I don't trade. That day in the backtester, it could take a $500 loss. But you wouldn't take that because hopefully you wouldn't trade that. Which is why I don't sell many products, yeah? Because if you put a lot of my products into the backtester on default settings, they won't make money. That's not what they're designed to do. They're designed to automate your trading. They're not designed to replace you as a trader. You've got to learn to trade. If you want to run, but as I say, if you're a hobbyist, whatever, do what you like. Hobby traders can, get on with it. But people that want to make money long term will identify how to do it. You extract money out of market movement. You can't control market movement. So there's no EA on the planet that can predict market movement with any success rate. Yeah. Apart from the only ones that work, the only ones out there on the marketplace, especially on MQL5, the ones where the EA has a signal service attached to it, and that signal has been running for more than 100 weeks or 50 weeks or whatever. So it's been running for more than a year. If you look at every single one of those EAs, you will find one thing in common with them. It should be very obvious. Yeah. None of them are using a stop loss. They're all position trading strategies. Yeah. So the EAs with the long-term profitable signals, position trading. Yeah. All the others are either short-term signals that get replaced every few weeks, because what they do is they work for a bit, they blow. Like prop, like I was just explaining. Market conditions are right. We got a lovely P&L. It's gone wrong. Reset the signal. Market conditions are right. And what happens to their sales is these EAs with these signal services attached that have short periods of weeks is their sales are small. And then as the signal starts to generate lots of profit, their sales increase. When it blows the account, their sales stop. They start a new signal and repeat that cycle. So their sales of their products look like that. So as long as the signal's generating revenue, people buy the EA. When the EA blows, people stop buying the EA. Yeah. And this is why you find as well, EAs. You'll suddenly find an EA on the marketplace. It will disappear and it will come back. The same EA with a different name because everybody knows that EA is crap. You put a new label on it, it's a new EA. It's just rinse, repeat, rinse, repeat. And the only people getting rinsed are the people buying the EAs, which is why I never, ever publish signals for any of my EAs because there's 1,000 ways to make money with them, but they'll only make money if the market conditions are right. And I don't want to make a living out of this because if I did that, then I would be just a support agent, wouldn't I? And that's not my job. As much to obviously Happy Chappie's disgust, obviously. My job obviously is doing something else. Anyway, I love a troll every now and again. It's good fun. You've got to shut them down quick though because they just destroy the stream. Right, I'll be back tomorrow. So this afternoon, be aware, obviously, CPI. So 0.2 is the forecast. Any deviation on CPI is going to move the market. So if we get a 0.3, we'll probably get a slight bullish movement. If we get a negative, we'll probably get a large bearish movement. So the positive numbers are likely be either neutral or slightly bullish for the US, or very bullish and then A-shaped recovery. Negative numbers are possibly indicative of a higher interest rate drop next week, which will scare the market into selling the US. So that being a negative will probably have a bigger impact. If it comes out as forecast, guess is as good as mine. Could go anywhere. Bear in mind, the CPI year on year is also forecast to drop. So if this drops and this rises, that kind of cancels the move short term and long term. So this is long term CPI outlook. This is short term. So if the short term outlook is holy crap, the long term outlook is it's not as bad as we thought, kind of evens itself out. So this is why it's not cut and dry. This is why you can't trade news. Never cut and dry. It doesn't matter what the number is. It doesn't mean it's doing that. It means something will happen, but the outcome is always going to be different. So so tomorrow afternoon, I'm back on at 2:15. So I'll be on after the rates have come out. Or should I come on before? No, I'm going to come on at 2:30 and we'll do an analysis of it. I'll see. We got the US PPI figures as well. So again, we'll see what the market's like. It's Thursday, yeah. So I'll be on tomorrow afternoon. So we'll see what it's like tomorrow afternoon. Right, there we go. That's all I've got for you today. Anything else you need, let me know. I'll be in Telegram or Discord. So smallest account to action position trading should be 2K with 0.01 lot. Yeah, if you're going to do it that way, yeah. That's what the bootcamp says. So I wouldn't recommend that. I would recommend you get in with 6K or 5K and 0.03 as a bare minimum, ideally. So that allows you to do partial drawdown control. You cannot do partial drawdown control on a 0.01 lot. You can only close it all out, which means you lose the ability to do drawdown control effectively, which is important. So that's the ideal. But you know, it is what it is. And with that, you're going to make somewhere in the region of £500 a month, $500 or whatever it is, 10% a month. Yeah. But again, you know, it's you know, you're not going to win every month either. So it's just you've got to use what you can afford. So I'm just shutting this DAX short I've got on over here. So if you're still in here, happy chappy, not happy chappy. Yeah, happy chappy. If you're still in here, obviously this is all the money I've lost this month on this account. So yeah, you're totally right. But I gave all my money to him. What should I do now? Which one? To Happy FX? Basically, trade with what you can afford to trade with at the end of the day. Happy channel. Yeah. So, again, go what I was talking about earlier. If you're doing this because you want to generate income or you're doing this for fun, you've got a totally different financial attached to that. Yeah. So, but never trade with money you cannot afford to lose. Yeah. This market can do anything at any time. And whatever you put into your broker, you will potentially risk losing. Yeah. So if you cannot afford to lose it, you should not be using it. Yeah. If you can afford to lose it and start again, fine. Yeah. But if it's your first account, trying position trading, keep it small. If it's your first account with position trading, use a demo for 3 months. This is a long-term thing. Yeah. Just before I go, this is something that takes most people somewhere between 3 to 5 years to crack trading. 3 to 5 years. Yeah. People go, I'm going in with real money because I want skin in the game and stuff. Yeah. If you go in with a demo for 3 months, it's not going to put your career back. Yeah. It's 3 months of a 3 to 5 year period in which it's going to take you to understand how this thing works, why it works, and how you take money out of it. Learning that taking money out of it part comes by doing it. Yeah. If you do it on a demo account, the problem is you're not trading real money, so pressing the button doesn't have any problems. Yeah. Doing it on a real money account, you think twice about pressing the button. Yeah. The money that you put into any trading account when you trade, when you're starting out, has to be enough that it hurts if you lose it, but not so much that it really hurts if you lose it. If you see what I mean. Yeah. If you have 10 grand in savings and that's all you've got and you put the whole lot into trading and lose the whole lot, what's your wife going to say? What's your kids going to say? What are you going to think about it? If you've got 10 grand in your account and you put 2 grand in there and you lose that 2 grand, it's going to be that's stupid. You know, you shouldn't do that again. Not a holy crap, I've lost all my savings. Yeah. And do not get a loan. People have contacted me before and said, I've just got a 10 grand loan. I want to start trading. Go and buy a car and hope it appreciates in value, or invest it in a business, buy some stock and chuck it up on eBay. Yeah. Don't get a loan to trade with. Yeah. Because all you're going to do is run up a credit card bill or a loan. Because if that money vanishes, you've still got to pay the loan. Yeah. Be sensible. I always find it surprising how naive some people are. It never ceases to amaze me when I get DMs about people that have just paid the scammer for the special set files that generate 150% return a month for my products. When I come in here every day and say you're going to get 10%, it's just, I don't know. Some people, you could hit them over the head 10 times and they go, right. And they'll do the same thing again, knowing full well that the next time they do it, they're going to get hit over the head again. It's like some people just, I don't know. It's not naivety a lot of the time. It's just, I don't know what it is. Some people you can't help. You just got to accept it. Funny how you don't trade gold, but your reversal alert works very well on gold. Yeah, nobody shows me a P&L. Somebody contacted me yesterday about they've sent me something with gold and said, why doesn't this work on gold? Yeah, it doesn't work on gold. Somebody's just done a test and showed me that it doesn't work on gold. But the market reversal alerts indicator doesn't work on anything. The market reversal alerts indicator shows you when sellers have taken control of the market and when buyers are taking control of the market. That doesn't work on gold. That shows you when price over time has increased more than it's decreased. Whether or not it works on gold depends on what happens after that alert signal happens, doesn't it? In that case, it worked. In that case, it didn't work. All I would say is position trading doesn't work on gold. I don't know if you're doing something different with the market reverse alerts indicator on gold and it's profitable, brilliant. Let me know what it is. If you can replicate it with the market reverse alerts EA or the position trader EA, we'll run a back test. But personally, I'm not profitable on gold. That's why I don't trade it. Position trading, I've never had success with it. So, but that's just me. Anyway, but yeah, send me it if you want. If you think it works so well and you've got a strategy with it, I'm all ears. Obviously, I'm never one to turn down making money. Right, I'll be back tomorrow afternoon. We'll analyze what's going on with the CPI this afternoon. We'll analyze what's going on with the euro interest rate and the PMI figures, and yeah, see where everything sits. All right, have a good day. Anything you need, let me know. Telegram or Discord. Otherwise, I will see you next time.